Before we start, I wanted to throw out a few housekeeping items. Number one is we're going to provide you with a link in the chat feature of the PowerPoint that you could use to take notes. You probably need to print it to do that though. And we'll also be sending you a recording of today's webinar. Let's see. Please use the these are really fun when they're interactive. So if you have questions, please use the chat or the Q&A feature, and Ann will answer them at the end of each section. And there's like 12 sections, I think. So she'll pause for questions. You can put them in there so you don't forget about them, and then we'll address them as we go. Also, you'll receive a brief survey after the webinar is completed, where we're kind of asking for feedback on how we could possibly make them better. So we would appreciate your cooperation there. So my name is Ed Cook, and I am a SCORE volunteer here in Canton. For those of you that aren't aware, SCORE is a national nonprofit organization. Began back in 1964, and we currently have 225, around 225 chapters throughout the U.S. and over 11,000 volunteers in those groups as well. So locally, we're funded by the Star Community Foundation, the Hoover Foundation, the Greater Canton Chamber of Commerce, and we are a resource partner with the SBA. Besides sponsoring educational workshops like these, we counsel small businesses, and that's really what our forte is. So if you have questions about starting a business, whether that's for-profit or nonprofit, or you have an existing business that you think you need help with, please give us a call. Or you can see our contact information there on the screen. Locally, we have about 47 volunteers, and they have a very mixed business skill set. So we've got, people that were directors of marketing. We've got a banker that's been around a long, long time. We have HR individuals that work for Goodyear. We have a lot of people that retired from Timken or from PepsiCo that can help you solve any problems that you think you have. So our counseling is free and confidential. And if you contact us, we'll reach out and we'll set up a meeting time and place at our office or at a coffee shop, whatever works. We can do it via email. We can do it face to face. We can do it over the phone. So we're there for you. So with that, I'm going to turn it over to Ann Sharp. She is a certified instructor. And so with that, I'll turn it over. Ann, all yours.
Good morning, guys. My name is Ann Sharp. I am the owner and founder of Excellent Admin. We are a small firm that does bookkeeping and payroll and taxes and helps with workers' comp and sales tax and those types of things. But we basically, our entire business works inside of QuickBooks, whether it's desktop or online. So Canton SCORE was given my contact information from another organization I worked very closely with to run the training seminar that we're going to run today. So this is the second training seminar that we're running for Canton SCORE here for QuickBooks Online. Just so you know, QuickBooks Online can be used on any computer. It does not matter if it's Mac or PC, which is a benefit. Honestly, it can run on your cell phones, iPads, and so on. The screens might look just a snid different depending on the device that you're on. It also can look different pending if you have more than one company and some of the drop downs and stuff. But the goal of the class today is that we'll talk about, and you'll see as much as you need to see for the beginner's course. And then we grow on each of these courses as we go. The final course is a final review where you actually get to see everything kind of implemented all at once. Some of the stuff you're going to use all the time that we teach in the course. Some of the stuff you're going to use, here and there once a month, couple times a year. And I'll kind of emphasize some of that stuff with you. So we do have a decently large class today, so it will take us some time to get through these modules here. Like Ed said, I just want to do questions after I finish each module. The reason for that is I might answer your question before I finish the module. And so it just saves time with a class this size, but also make sure that you guys' questions get answered while we're still on the topic and we're not kind of jumping around. So that's really important. Today, we're going to start from the very basic, as if you had never had QuickBooks before, and get you all the way set up to where you can actually start using QuickBooks and categorizing, okay? So signing up for QuickBooks Online, I'll actually sign up for an account, so you'll see that whole process. We're going to talk about adding users and why it's important. You're going to review your dashboard, which will change as we go from course to course. The reason for that is that your dashboard gets smarter with the things that you're doing to be more personalized. The goal of QuickBooks is that it's integrated with your bank account and your credit cards and those types of things. So when it's integrated, it starts to remember we're creatures of habits. We go to the same gas stations and might go to the same restaurants, and we use the same suppliers. And so it gets smart as we start to use it. We're going to talk about a chart of accounts. You can upload a chart of accounts. You can add it just manually. It comes with some already. We're going to review some reports. We'll go over very basic reports. There's a lot of reports in QuickBooks Online that you could go through. Most of us are going to use 3 to 6 of the reports given, depending on what we're trying to compare. We'll review some preferences. Again, obviously you can customize, there is some customization in QuickBooks. Again, you get on both sides, online and desktop. So we'll talk about what we can do with the online portal. We're going to set up a bank account. We're going to talk about categorizing and learning the IRS standards for these. Manually entering transactions. So obviously, although it isn't, the goal is to be integrated, it's not a perfect system. So sometimes we do have to enter stuff manually. We'll talk about rules and importing some data, and that'll be, just the basic little snippet for today's class. And then again, we build on it going into the next course. Okay. The PowerPoint, like they said, is dropped in the link. I'm not going to show the PowerPoint the whole time. I actually teach by doing. So I encourage you, if you have multiple screens or had the ability to print it or have time to print it, go ahead and take that time to do so. The PowerPoints are screenshots of what you should be seeing, and obviously step-by-step instructions on what we're going to go over. But I will actually be working inside of QuickBooks Online doing the step-by-steps. Okay. So let me go ahead and pull the slideshow down, and then let me make sure you guys can see the proper screen. Okay. So I'm going to pull. So I log in to QuickBooks Online or create my QuickBooks Online account through Google Chrome. You'll notice I'll use Chrome for the whole training. It doesn't mean Chrome is better than any other portal, just so we're on the same page. It's just a preference for me. You guys, if you're Mac users, you're probably going to use Safari. You can also obviously install Chrome, and you might even use like Microsoft Edge, or I think it used to be the old Internet Explorer. That's fine too. The only time that QuickBooks Online might handicap you is when you're importing or exporting things, depending on what portal you're using. So just know that it could happen. Okay, so in Google, I'm going to be a new user. So I'm going to go to QuickBooks Online. And obviously, it's really important that you always find like an Intuit site that has the little QB logo so that you know you're on an actual QuickBooks site, because obviously there's a lot of sites out there. You'll see that there are 3 versions of QuickBooks, pending what we're trying to do. Big thing is going to be how many users do you need. This is going to tell you which one you probably want to pick. Okay. The second thing you might want to look at is, are you doing any e-commerce stuff? Do you need contractor tracking? Are you going to do bill pay? Some of those features. So I always tell people to look. I usually encourage you to start with the plus at $42.50 a month. The reason for that, you get up to 5 users, which I think is very important, but you also get the bill pay feature, which tend to be the biggest used feature in here. And the bill pay feature is where you can write checks. So that's why I want to emphasize the bill pay feature there. Now, if you decided, oh, I don't know if this is going to be something that I want, you could start with Simple Start. And then if it has something that you needed that you can't use, you can always upgrade later too. You can also downgrade. So, luckily QuickBooks Online has made that process very easy. So I'm going to go ahead and select the plus because that's going to be what we're going to do. And then obviously it has payroll features. We're not going to do anything with payroll on the class today. So my total checkout today is going to be $42.50, and I'm going to click checkout. And I'm just using another email address from somebody on my team here, because obviously I already have my email address used for my own QuickBooks Online account. And then it does send you security codes, which is great. It can also send you security codes to get logged into QuickBooks pending on your device. So obviously the users come into play because we have to make sure we have proper users. Otherwise, you guys will have to be sending codes left and right to each other. So then obviously it wants information here. I'm going to just pull this off the screen and type it in for myself here. That way we can. And when you guys do this, obviously you'll put in your own passwords, your own usernames. You get to pick kind of that stuff, which is nice. I tend to do a bank draft instead of a credit card. That's just a preference for me, but you guys can do it any way you want. If you get points for your credit card, I obviously always encourage that. Perfect.
Hey, Ann.
Yes.
Hey, there was a question. I thought, I'm not sure it would come up later, but Paula is asking, she's stating that nonprofits can get QuickBooks for $75 a year through TechSoup. So just an FYI, I guess. So
Yes, any nonprofit that is a member of TechSoup gets substantial discounts, whether it's on online or desktop. I didn't know the exact pricing, but yes, that is correct.
thanks a lot, Paula.
So then obviously, because we're new to the QuickBooks portal, we're going to have a lot of wizards. This is what I would consider a wizard. Okay, so you have to hit next in order to go through. And it's going to ask us what our business name is. And obviously, I'm going to use all our information for training purposes today. So Excellent Admin. It is important that you guys have this information filled out. And it'll ask you if you're using anything else. I'm just going to say other. And then obviously, pending what you select here will tell you some of the chart of accounts that might open up for you. We are an S Corp, so I'll select S Corp for that. And then obviously it wants to know what my role is. I'm the owner or partner. The person that's setting this up, I would assume, would be the same type of thing. However, if you have a team member that does it for you, that's totally okay. You can skip some of this stuff too. You don't have to answer all of it. I'm going to click I fly solo because I don't want to fill out employee information for us today. And then I don't use any of these apps. I don't encourage to sync PayPal for a couple of reasons, and we'll talk about it as we get later. So I would say we would skip that for now. And skip this for now as well. And as you can see, our bar at the top is telling us how far along we are in the wizard. And I'm skipping a lot of this because we'll actually teach this as the course goes on. So I don't want to do it through the wizard. We want to do it as we're going through piece by piece. So then you'll see here, get things done. Wizards are going to pop up. So wizards are going to pop up through the class all day today, pending all the things we're doing, because everything we're going to be doing since we just set up the account, just bought the account, is going to be a new item. So they have wizards for every item. The wizards don't always pop up after you've been in there for a little bit, but they do pop up for the first few weeks while you're working in here. Some of them give you the ability to say, don't show this again. You're welcome to do that. Some of them don't give you the ability, and you just either have to click go or click the little X to get the bubbles to pop away. It does freeze the screen behind you for the wizard. So just so that you guys know. So that is the first step, picking our package, looking at the things that we need, making sure that we have them. Again, if you need to upgrade or downgrade, we can totally do that. We'll talk about that when we look at preferences. I'll show you how. And then, making sure that we get everything kind of set up properly. The more information you fill out in the initial wizard, the better you're going to be. Because when we look at preferences, you'll see all the information that we filled out is going to show in preferences. It's also going to show in things that we do later in the course, invoicing and those types of things. So it's important that you fill out as much as you can and don't leave things blank, basically. Any questions about getting set up? Usually this step, people tend to already be set up. Obviously, that's why they're taking the course, because they are already in here, but trying to figure out how to use it. But I just want to make sure if you have any questions about setting up the accounts. Okay, perfect. So now our next thing we're going to talk about is adding users and accountants. So why is it important to have a user and an accountant? So accountant access, actually, they have different access than you do as the owner of the company. They have the ability to undo reconciliations and things like that. We'll explain those as we go. So the accountants can overturn some of the things that maybe you as the owner or the primary admin might have done that might have been incorrect. Okay. So an accountant, obviously that's important for them to have that access. Somebody needs to be able to do it if you needed to make a correction that you couldn't do on your own. Accountants also then have the ability to see all your transactions for tax planning, depending on how often you meet with them. Obviously, if they get in there once a month and check your stuff for you, or maybe it's quarterly, those types of things, it's going to be really important. The reason you need users and accountants, though, is because QuickBooks Online will allow us to see who did the transaction when the transaction was done. So if you were to look in here as an owner and look at a report and go, wow, I don't remember spending this much in gifts and novelties, you can look at it and go, well, we didn't, and this is categorized wrong. And then you can click on the activity and figure out who on your team maybe did that. So you can make the correction and teach them to do it better. Or, oh, maybe I didn't explain this well enough. Those types of things. You also have the ability to grant users only a specific access. So they could be able to do invoicing, but not actually be able to see your bank account. Or they might be able to do, to see the bank account, but not actually be able to see customer lists. So you can control what they have access to. You can do the same thing in desktop. You can control what your users have access to. But it's going to be really important that you're not sharing usernames and passwords. Obviously, if you have turnover, that's a big deal. You only give people access that you want them to see the things that they need to see to do their job. As an owner, you want some privacy probably. And then also to make sure that if there's an error or somebody changed something or something got deleted, we know who did it so we can fix it. You can also lock QuickBooks, meaning you can lock it every 30 days with a password so that you can't edit the previous 30 days again. We'll talk about that later in the class, but that goes into users as well. You have to lock each individual user. So in order to add users and accountants, you have to go up to your little gear icon here. And you'll see an item here that says manage users. The good news is you don't need a ton of information to manage a user. So you just need a name, and you honestly could just have a first and a last initial if you need to. But you just need a name, and then you'll need the email address. So to add just a regular user here, you click add user. Now you get to tell it what type of user you want it to be. A standard user, a company admin, you want them to do only reports if you do time tracking, okay? So we're gonna go and say we want it to be a standard user for the moment. Then how much access do you want them to have? You could say limited, and then you can collect, I only want them to see customers and vendors. And then it's gonna tell you what they have options to. It's also gonna tell you some of the things that maybe they can't actually do. View bank account, right? If you want them to have all access, then they're gonna be able to do all of these items. Okay, so I'm just gonna do all access for now. Again, take the time if you're adding users to look at this stuff and make sure that you guys give people the access that they need. Most people aren't going to do anything with some of it, but it's just more for your sanity. You can also give them limited access and add more access later. You can edit a user that way. Okay, so if we click next, then it's going to ask you some more questions about users. Do you want this user to add and edit or remove users? No, they don't need to do that. Do you want this user to edit company info? Yeah, they can do that. Do you want this user to manage the subscription? No. Well, some basic questions there. Then we would put in their name. And I'm going to use my information again for training purposes. Now, you will see that I've been invited. Once the invite is accepted, I would turn to active like you see here. And then I have the ability to edit. So if you send an invite and they don't access it right away, you'll be able to see how fast they get into it. Same goes for if for some reason they're like, I don't have the email, I don't remember it, or the email timed out. You can delete the user and re-enter them, or you can resend the invite. Then it populates to the beginning of their inbox, okay? You do the same thing with an accounting firm. You just have to put the accountant's email in, okay? Usually with this plan, it includes 2 accountants and 3 users. So just keep that in mind. If you have somebody that helped you create your QuickBooks Online account, like an accounting firm like myself, sometimes they tend to show as a primary admin and an accounting firm. They obviously don't need both. So you can relieve this primary admin and give it to somebody else on your team and obviously free up a user, which it just depends on how many users you're going to need. Okay. So I see we've got some questions in the chat box. So let's see what we've got before we move on to the next section.
Camille has an interesting question for you if you cursor down.
Okay.
I don't know if you can see it or not, but she's wondering if she can give only my accountant access to with the basic package. Do you see the question there, Ann?
Yes.
Okay.
So you mean with the simple start, that's like the $15 one? The answer is yes. You still get to have an accountant on there. You just don't get any additional users. Perfect. And then it looks like we had a question from Paula. Paula, so you'll see here, your plan includes up to 5 users right here on the top of the screen. But it also was in the initial drop down when we were looking at the 3 packages, there was a line item for user.
Thanks, Ann.
No problem. Amanda, it's not, you are included as one of those 5 users. Perfect. I think, Ed, those were all the questions we've got so far. Amanda, you are already set up. If you've created the actual QuickBooks account, you would already be set up as a user. Perfect. Okay, so again, on here, you can view their activity. This is one of the things I was telling you that's really important with users is the audit log. You'll see that obviously I haven't done a whole lot other than change settings and everything's dated today. But as you get more and more into it, you can see it. This way, you know, if you have employees maybe working remote and you just needed to make sure that stuff was getting done, you have, you know, a little checks and balances here. It also lets you know if there's, you know, if they change something, you can see when, and if obviously you can look and see if that was something that you wanted. Okay. Any other questions about adding a user? Okay, perfect. So the next thing we're going to talk about is reviewing the dashboard. Okay, so we'll go back to get things done. So this is one of our dashboards. This dashboard obviously is designed right now just as all of our setup stuff. Okay, so as we start, you know, we've got the basic information in. Once we start getting into the invoicing and some of that stuff is going to change. You also have a second dashboard that's called Business Overview. The business overview is going to be the dashboard that gets the most customization once we start putting data in. What that means is as you create invoices, you're going to see how much is outstanding, how much you maybe have collected, what's been deposited. You're going to show your bank balances here once we integrate a bank account. You're going to see your sales over whatever time frame you might look at. You're going to see your expenses as we add in expenses here. You're going to see profit and loss for items, you know, so you can see how you're doing. Again, these are all for the last 30 days, but once we add data, you can change these to be certain things, okay? But this is like your dashboard snap view, okay? Now, this dashboard, and if we go back to get things done, and this dashboard are two different things. The business overview is just showing you numbers and data that from stuff that you've put into QuickBooks, okay? This dashboard will turn into the quick wizard where it's like, go to bill, write a check, go to bank account, and those types of things. So once we get through some of these setup items, which we'll get through some of them today, you'll start to see that this will change immensely, okay? I usually encourage people to use mostly the business overview. It just gives you a snapshot as long as you're keeping your QuickBooks up to date. So the benefit of QuickBooks Online is that everything syncs. What people then need to realize is that just because the data is in here, until you actually categorize it, it doesn't actually do anything. It just sits in here in the data house. So we'll talk about that as we get into syncing the bank account and stuff. But so once you've actually categorized the data, then these reports start to change. And we'll look at this report after. We probably won't look at it a lot of it today, but you know, in the next course, we'll look at it so you guys can see that all these zeros and all this stuff now will start to change as we're starting to put stuff in here. Okay. Camilla, yes, you are allowed to join at the $45 rate and then switch to a lower package. We will go over the switching between packages when we get to the preferences. And then they had the question about the audit log. So let me go back over here to the users. So if you click the little down arrow, you can view the user's activity and it takes you to the audit log. This is one way to view it for an individual user. There is another way to view it, which we'll talk about when we get into actual individual transactions. Perfect. Okay. So now we're going to talk about chart of accounts. So chart of accounts is the categories that we will be doing in order to see on our profit and loss, one of our statements we might see. This would be the accounts listed. So for example, dues and subscriptions, meals, entertainment, if you have it, sales, that can be more customized. The benefit of QuickBooks Online is that you get to make the reports as massive and detailed as you want, or as non-detailed as you want. Pending your business, that might matter. So I'll use our business as an example. I like to see the difference between training income from things I'm doing today to payroll income to make sure that we're making enough money on their payroll costs, right? To our package income, along with tax income. So I have 4 income buckets that I like to monitor for my business so that I can tell you where our moneymaker is and determine if all of these areas are things that my business needed to keep. The reason for that is that I started my business and had HR services as well. But as my team didn't grow as fast as I needed to do, we couldn't keep all of these things, and HR was something that was very time consuming and not making a lot of money at the time. So it was one of the areas that I decided to change my business course and add training instead of HR. You guys are doing the same thing, whether it's you working in a bigger organization or you guys running your own business. We go through and make those types of decisions all the time. Okay. So we have a couple areas that you can see this. So if you were to look under new here, you have a whole pop-up wizard that pops up. Okay. So we have the ability to look at vendor centers and, well, it doesn't have, because we haven't integrated the bank, it doesn't look like it's going to show me the chart of accounts. So let me see here. If we click into here. I'm trying to get it to populate where I can see the chart of accounts, but it looks like I probably won't be able to see it until we sync the bank account. So we're going to jump down to setting up the bank account so then we can see the chart of accounts. So there's a couple spots you can do that. Obviously, there's banking services. The thing with QuickBooks Online is that QuickBooks Online is now allowing, they like set up their own banking system. So obviously you can get in this wizard very quickly and end up with a QuickBooks checking account when really what maybe you were trying to do was do your checking account. So if you see down at the bottom here, you have a link account button. And it's going to bring up your bank. Okay. Now, if your bank isn't listed in these, you could totally type in right here. I personally use Citizens Bank, so I'm going to go ahead and sync in our bank account here. I'm going to pull this for username and password purposes really quick. Well, maybe if it's going to let me. There we go.
Are you still there?
I'm here. Sorry
Okay.
about that, guys. It
That's okay.
was freezing. It wouldn't let me type in the password, and I needed to be able to type in the password. So, okay. So there, now you should see. So some banks will have security questions when you're integrating. Some banks are going to have your security codes that you might need to send. It depends on where you bank on the next steps. So my bank uses security questions. So sometimes it asks more than one. Huntington is one that will probably ask for 2 or 3 codes in the process of integrating. Some of this goes into play with the stuff that they have going on the back end from a security perspective. Some banks require you to log into their portal and grant access to allow QuickBooks to connect. Some banks, if you have the digital token, you have to do some workarounds in order to integrate into QuickBooks Online, but they've worked really hard to be able to be very integratable with most banks. There's probably a few credit cards that aren't super sync friendly, but majority of those have been fixed as well. If you use a POS system, so a point of sale system, they obviously integrate as well. Sometimes there's an additional fee with that. So just kind of do your research pending what you're looking to do as your business grows, so that you know if you want to spend the money or if you want to do some of the data manually, those types of things. So I'm going to just do a main account here. And then at the bottom, it tells me how far back it wants you to pull the transactions. For training purposes today, I'm going to pull all the way back to this year for January 1st. That should give us, 5.5 months worth of data. It wants to know what type of account this is. So again, if you were integrating a credit card, you would have to make sure you select credit card. This is a checking account. And then I can name it however I want. I do encourage people to name their accounts with the last 4 of the account number on it. The reason for that is that obviously if you have more than one Citizens Bank account or more than one payroll account or more than one savings account or more than one Amex, you want to know that you're working in the right account for the actual account number. So it just helps with allowing anybody else to help you in this process. Okay.
Hey, Ann, do you have to connect a checking account?
You do not have to, no.
Okay.
Let's see here. An unexpected error has occurred. All right, let's put their -1 back in then. There it goes. And it might, pending how many transactions you have, this process might take a minute. It also might not all load when we look at the screen after this. You'll start to see it'll populate. The good news is that once you do have it integrated, if it stays integrated, some banks, it kicks out every once in a while for security purposes, and you'll have to redo your password to relink it. It will load the transactions within a day of you actually swiping or a check cashing the bank. Okay. So the goal is that it stays pretty responsive to all the transactions going on the bank account. And again, you can see kind of how far it's going based on the bars, which is one of the benefits of QuickBooks Online, is at least they kind of let you know. This is another wizard. You don't have to pay any attention to it. I'm going to X out of it. So you'll see down here that now that we've done banking services, we link the bank account. Now under the bank transactions, you'll see that you can, I don't want this wizard. I want the actual list. So let me skip this for now. There we go. You'll see the actual account listed here, and then obviously the charges. Now, if you do the version that's a step down from this one, the screen looks a little bit different than this. If you do a step up, the screen looks pretty much the same. Okay. Now, some of this is if I do, if you have more than one account, you have the drop down here. Sometimes there's an arrow here, so you can drop it down as well. Once you've integrated one account, if you needed to add additional accounts there, you would click link account here and you can upload from there. If for some reason you think that it's not updating, you can click update and it'll do it. Again, the time I see banks disconnect the most is when the bank has pushed through a security update. And so part of that security update is it logs you out here and then you'll have to log back in. Obviously, if you click on this, there's a little pencil and you can edit sign-in information or edit account info.
Hey, and what do you do if the bank won't allow you to link it?
You'll have to do the manual entry, which is we can import data. We'll go over that. I don't think we go over, well, we do go over importing today. So we can still set up the account without syncing it. And then we would be able to import the data. You can import even in a format of Excel. So as long as your bank has the ability to download, I will tell you some of the banks like Bank of Magnolia would be one, not the easiest to integrate. There's a Credit One Bank or something for a credit card that doesn't integrate. And I know that it's just, some of them are old-fashioned platforms type of things.
And you can do this with more than one bank, right? You can
Correct,
have-
yes. Mhm.
Okay. All right.
More than one bank account, more than one credit card, and even more than one POS system if you're using more than one. Yep, you can do, the goal is that it houses it. I have clients that have 12 or 15 accounts synced in here. So amongst down here, you'll see the list of transactions. So as you can see here, if you click on a transaction, it wants to categorize a transaction. It's important that you put a vendor name in here. So the vendor name is who you bought whatever from. Okay. So as you can see here, it's trying to help me because it realizes where I spend money, Dunkin' Donuts and Hiscox Insurance and eBay. It's smart. So this is a bill and pay. This is one of the portals I use to collect funds from clients. So I would put bill and pay as the name. And then because it's something new, I would have to hit add. I don't need all this detail filled out, but you are welcome to fill any of this information out, address, if you have email addresses, phone numbers. This comes more into play when you're working with customers. And then as you can see, now it says bill and pay, and it's trying to categorize it under a merchant fee. It's not wrong. So that would be okay for me. I would be all right with that. And then because it's integrated, you'll see that it will always have a memo line here. And the memo line tends to give you some detail, might not give you all the detail. And you could type in any detail you would want in here. That's all customizable. And then you could hit confirm. And because now I've done one item, now it gives me all the items that are in here. Okay. Again, some of these might be right. Some of these might not be right. Okay. So a mobile deposit, it thinks a sale, that's not wrong, but I use invoicing features, which we'll talk about later. So then we would do it. If I transfer to checking, it thinks it's me. This was actually paying a credit card payment. Paychecks is a payroll service. So, that would need to be recategorized. So you can't just rely on these accounts to be listed here and it to be perfect. It knows the big vendors, the big dogs, Chipotle, some of those things. It's going to know because hundreds of users are using those names and going through it. But you can see that the data is here, and you can see there's multiple pages of data, and I have 400 transactions to look at, 439 to be exact. And then once you categorize transactions, they go into the categorized bucket. Okay. The only time you're going to exclude transactions is if there's duplicate data, which might only happen in the initial sync, or if it disconnects and you reconnect it, or in the case of you don't want to sync a bank account to it, you want to import the data manually, there could be an overlap pending the days that you're importing. Okay. That would be about the only time you would exclude it. Other than that, you would exclude if it's, not if you think it's duplicate income and some of those other things, which we won't really talk about today, but you do use it a little bit more than you think, but it still will have very minimal transactions in there. Okay. See the little arrow here I was talking about? If you make that small, you get it to look like this. If you bring it down, you get it to show the actual account. Again, they're trying to sell me on their QuickBooks checking. I don't want anything to do with that. So I just try to make sure that I X out of it. Okay. It looks like we might have some questions. Okay, so yep, if you have more than one bank, like I said, you would just click here and we would link an account, and it's going to take you back here for you to either select a different account or search a different bank. So obviously, we have multiple platforms here. Okay. Robert, you might not be able to. Some of the individual credit cards are not the best at that. Let me see here. Because I think Synchrony is one of them. Because I don't think you're under Synchrony Financial with that credit card. You would have to maybe log in through PayPal. I think PayPal's on here. PayPal credit, MasterCard, or crypto. Maybe try that portal, Robert, and see if it gives you the option to see it amongst your accounts in PayPal. If not, when we go through importing data, I'll show you how you can do it without being able to connect the account. You got to be careful with that. Because you don't want it to have like duplicate data from the PayPal account. So if your PayPal account, obviously you might be paying things out of PayPal, but they're coming out of the cash out of your checking account, or if you're moving the money from PayPal to your checking account, you are capturing some of those transactions. Veronica, if your bank will not let you sync, it won't let you link it in here, then we will have to manually import it. And I will show you how to do that. We haven't gone over the manual import now. Okay. This is the screen if your bank account will let you link. If it doesn't let you link, we'll have to manually import the data. Okay. So don't feel lost yet. We got this. And then Robert, it says, I deposit my cash from cash drawer to checking. It was linked as revenue, which is wrong because I already recorded this as revenue when the transaction was made in the POS. Robert, you probably need to create like a petty cash account in order to move that money around. Or you would match it when you do a transaction from the bank ledger. So whatever the deposit was to the POS system, you know, sales number, whatever it was, you would need to match those transactions. We aren't going to really talk about that until later. We don't do matching, I think, till the next course. But, you know, keep that in mind, if, you know, when you log in for the next course to be able to do that. But the cash category, yeah, is probably not right. Nicole, even if you have two businesses and a personal account, you can do it all. When you go in here to link an account, I could go in and select all of these, and some of these are personal, some of these are business, anything that might be used for it. Obviously, good practices, personal accounts stay personal, business stays business, but we know as small business owners that isn't always the case. So no big deal there, but yes, you could link all of that.
Hey, Ann, do you want to like hold questions, or are you okay taking them now? Or I don't want to throw your timing off at all.
No, it's okay. I'll finish these ones and then we'll jump into the next session and see, because most of these questions kind of pertain to what we're talking about, Ed. I appreciate that though.
Okay.
Nicole, if you have more than one business, technically you need more than one QuickBooks account. You shouldn't be running more than one business in one QuickBooks file. Yes, it can be expensive because obviously you're paying for multiple subscriptions, but best business practice is that you keep it separate. Veronica, you'll get the recording at the end of the class, I believe is what they said at the beginning. And then Gabe. Yes, you can access the Learn QuickBooks with a sample business. It limits some of the things you can see, but you'll get a majority of some of the things that you would want. Okay, perfect, guys. So I know that linking the bank account is a little bit crazy and obviously a little bit detailed. If you have more than one bank account linked, you'll see them kind of listed across the screen as you see my mouse going, okay? Again, if you have the view like this, you would just see them in the drop down here. Every time you change accounts, you know, it changes what you see down here from an integration perspective, okay? So we got a lot of questions about, well, what if my bank doesn't let me actually integrate? No problem whatsoever. The goal of QuickBooks is that it does let you integrate, but if it doesn't for some reason, it happens. It's not the end of the world. So there's a couple areas that you would go. If you go up to the gear icon here, you have import data. You can import a lot of different things, okay? But what we were talking about was obviously bank data. Credit card data is considered bank data in this process. I just want to make that clear for you guys. So you would be able to click on the bank data and you can find the file, or you could try to bring them in automatically. Again, if this doesn't work for you, because there are a few of you that your banks just don't do it, you would have to do it this way. It tells you, you can export your bank statements as a CSV, which is an Excel file, a QuickBooks file, or another, different formats of a QuickBooks file, the QFZ or QFX and QBO. This is the most common, the QBO. It's usually in bank platforms as QuickBooks Web. Or you can do a text format, okay? Once you've downloaded it, you can either save it somewhere on your computer, or I save stuff in downloads. So I'm gonna find one for us because I'm sure I have one in here. And so you'll see that when I click on this, only the items that are formatted to be allowed to be imported are going to show in here, okay? So statements that are text files, the QuickBooks activity, so on. So I am gonna select an account that's just a different one. So we'll do Chase, okay? It turns green, so I know that it's accepted that format, okay? And then now it's gonna tells me checking account numbers and everything like that, and then wants to tell me where to go. So I don't have a QuickBooks Chase account listed here. So I'm gonna type in Chase here. And then obviously it is a bank account. If it was a credit card, make sure you were to change that, but it is a bank account. So I can hit save and close here and continue. It's going to tell me the import is complete. In this process, you could get things that say you could be importing duplicate data. It's okay. That's what the exclusion button is for if that were to be the case. Again, it's one of the safety things with manually entering the data, okay? So now I'm going to turn this little arrow down. You'll see I have 2 accounts listed, and you'll see I have 18 transactions in this one. And they're different, depending what it is, right? So now it's integrated another bank account. So you'll see the 2 listed. This was manually implemented. So where this little update button is right here, this little thing got right down here. For an account that is synced, it's going to constantly update. It's going to update all the time. It'll update, every couple hours, you'll see that it's been updated, and it'll show the date. When you're importing the data, it's going to stay today. So when we look at this next week for the next class, this is going to say that the last time it integrated was June 22nd. Okay. So you'll kind of know when you imported the information last, but it just depends on what you imported. So for example, I imported March data on June 22nd. So I still need to import April and May, right? Before I'm even into June for a duplicate issue. But it just depends on the time period that you're pulling the data out of the bank account. I tend to tell people when you're importing like this, import either weekly or monthly. That way it matches your bank statements to the day. So if your bank statement is a 1st to the 30th, then you import only that time frame, okay? If your if your credit card statement is mid-month to mid-month, then you're importing at that time frame. The reason for that is it helps to eliminate the overlap or duplicate data. So that's why I always encourage people kind of follow that suit. If you do it weekly, you're doing it Monday through Sunday, right? Or Sunday through Saturday, whatever it might be. And so you're keeping it consistent so that you can make sure that you try not to have overlap data. The downfall of having to manually import is obviously the file is not a working, breathing, living file all the time, but it's only a working, breathing, living file if you're constantly categorizing on a regular basis. Some people want it done weekly because they want to see it. If you're cutting checks out of here, that's great. Your bank balances in QuickBooks are what we would consider accurate versus what you might actually see in your bank account, because you have checks that you've written that haven't cleared the bank balance yet. So the more you use this, and more frequently you use it, the better. But again, accounting work can be time consuming, and so obviously as owners it might get pushed to the wayside until it's only done when you're trying to close everything on a monthly basis. I do encourage you to close it on a monthly basis so the data is fresh. Also, so if there's an issue with your bank account, fraud, the list goes on, that you can pay attention to what's clearing your bank account, because that's really important. You might have a check that you wrote and it cleared for a different dollar amount. It happens. If it's a handwritten check, the handwriting was, didn't get read properly, or it went through a check reader on the other side and didn't get read properly. I've seen checks for $2,500 clear for $25, and then obviously you have to make sure that that matches what cleared your actual bank account, so that if you owe somebody money, you can, pay the difference and whatnot, but pay attention to some of that as well. That's the goal of having it synced and being able to monitor that. Okay. So importing data is important. Again, like I told you guys up here, you can import lots of data. You can import a customer list. So if you've been tracking customers in a POS system and you're trying to get it all merged over, or you've been tracking customers in an Excel sheet, totally okay. You can port it in this way. You obviously, if you need to port out customers, you can do that too. You know, we can import and port out. That's great. Vendors, same type of thing. You know, if you've been doing everything kind of the old fashioned way in Excel or Google Sheet, you can port that information in. Saves you from, you know, having to do more manual entry. However, you know, it's not the end of the world. If you want to do a big cleanup, you don't have to. Chart of accounts, you know, if you're a part of a franchise or you have more than one business and you want everything to be the same type of accounts, you might port out the one chart of accounts from the first business and port it in for the new one so that you're using the same names for each business. It makes obviously it easier for you to review financials, also for categorizing, you know, so some of those things. Products and service, same type of thing. These are items that you would put on an invoice. If you're porting, you know, doing more than one business, you might want the stuff to be the same. If you were using a specialty platform for a specific industry, for example, landscapers have I think it's, what is it, land books or something, you know, you would be able to port in your services out of there into here, as long as they were in the correct format, those types of things. Same goes for invoicing out of some other system, you might be able to port that information in. Okay. So they do try to make it so that if your bank doesn't sync, you still have a way to get the data here, that isn't just manually entering a transaction. And we'll kind of go over here in just a few steps what manually entering a transaction looks like, so you guys can see the difference in the data. QuickBooks Desktop doesn't integrate, but does have the ability to import data just like this, obviously. Okay. If you moved from QuickBooks Desktop to online, or you have one company on one and one on the other, the files do talk when you go to import information. So you can still pull data out of that and import it into here. Okay. Any questions about importing right now? So Paula, your question is about the data and showing it if it's synced. If you have the rules set up, which we'll talk about rules in a little bit, if you have the rules set up to automatically add it, that would be why you don't see it. It should automatically be going in. If you don't have the rules set up to do that, you should still see it. It should just be changed from the category to say rule and then the category you set up. The way you could spot check that is looking at one of your financial statements, a P&L or something, in order for you to see it. And then it looks like we have more questions over here. Some of the QuickBooks pictures here, like the view, is a little bit different pending what subscription you're on. Also, if you're upgraded, because they obviously, some people might be in the old platform pending on how long you've had it versus the new platform, which they're pushing everybody into. So you'll see throughout the class that there might be look at the older view name and versus the newer view. You'll kind of toggle back and forth. Honestly, even the accountant view looks different than this screen. So it really just depends. The images and everything is still pretty much in the same spots based on the PowerPoints and some stuff like that. But it doesn't, it's kind of up to you. Okay. Okay, so that's how we import data. We've obviously synced our data so we can still see everything under the bank transactions. Okay, so now that we've done this, let's talk a little bit about the preferences. Okay, so our preferences kind of change a little bit based on what we're trying to do. So if you go up to our little gear icon here, you'll go to accounts and settings. And then you have some preferences in here. So you can add a logo. If you put the logo here, it'll show on your invoices, by the way. So really important. You can put your EIN in. Again, you can determine if this gets published on invoicing or if anybody else can see this. You could do an email address, customer facing email, so that that's the one they do. You could do your website, you know, your customer facing address versus legal address, you know, and then you can do marketing preferences. Under billing and subscriptions, this is where you can upgrade your plan or downgrade your plan or cancel your plan. Okay. They also have the ability to pay it annually. I don't believe it's any cheaper than paying it monthly, but something you can always check. And again, that varies based on if you're nonprofit, for profit, you know, type of entity. Accountants get a cheaper rate, you know, if you're in a trial period. Even some of your organizations, I don't know if Canton Score has it, but I know some of the small business development groups get a 12-month rate that you could put in here too. You know, just kind of depends. If you decided to downgrade your plan, it gives you an option, you know, this is where you're at, this is where you can go, this is where you can go. Again, see how I told you guys it has the users right here, all the other items that you have, okay? If you want to upgrade it, again, it does the same thing. It pops up and shows you the difference to upgrade and what your options are out there for upgrades. And QuickBooks is a web-based platform, so it will work as fast or as slow as your internet allows sometimes, or how, depending on how many users you have in the portal, meaning over the course of the world. So I noticed that QuickBooks tends to run a little bit slower in January when everybody's in there doing W-2s and contractor stuff and all the stuff for closing the books and getting to your accountants and stuff for tax prep is about the only time I tend to see it. Or Cyber Monday when the internet's like overrun, you know, so just be patient with it. It is obviously a web-based platform. You'll be able to see like your usage. So it tells you how many users you have, you know, pending your package, you get capped on the certain number of chart of accounts you can have. We don't talk about tags and groups, but if you use them, you can use them. Underneath your sales, you can set up terms, you know, so this goes into invoicing terms, you know, you have SKU codes if you're going to charge late fees, you know, that type of thing. Your expenses, you can turn certain things on for this. Again, all these are customization preferences for what you need done. So I always encourage people to take the time, look at all this stuff, determine what you need. QuickBooks has the ability to take payments, ACH and credit card payments. Obviously, there is not only a monthly fee associated with that, but also a fee that they take out of it. You know, their fees can be on the higher end. And from what I understand, they've made it so that you can't integrate any other processing company into their QuickBooks Online, which makes sense, obviously. But for some people, it still totally works and is worth it. So it just depends on what you guys are trying to do. If you want to do it, obviously, you can always learn more about it. It's not something we'll talk about today at all. You know, first day of work, your fields, and then obviously you get some advanced. In your advanced, you determine your currency. Obviously, it reads that we're in the USA, so it wants to do United States currency. So if this is something that you need to change, you would have to edit it in here once you set it up. If you were to set it up in a different country, it would probably geolocate you to that country and set up your currency under that country. So obviously, just pay attention to that. I say that because I set up my business 10 years ago when I was in Costa Rica. And it took a very long time for me to get everything flipped out of that and into US dollars. So I learned from my own mistake. But yep, so these are some of your preferences. Some of the other preferences that you're going to have are inside of invoicing. We can make some edits to that. We'll talk about those preferences when we obviously get into them. You also have a help preference here for them to help you. QuickBooks has eliminated the customer support phone number. So you do either have to chat or get a request to call back. Pending your package, meaning which subscription you pick inside of QuickBooks, you do get a dedicated person to you. So nonprofits get a little bit more support, payroll gets additional support, those types of things. But you have that there. The chats are usually pretty helpful. Again, Google's usually pretty helpful. People like myself and Canton Score are pretty savvy probably in a lot of this and can be very helpful as well. You might look at my expert. This would be your personal person in the QuickBooks world that you can talk to. Again, if you assign this to somebody specific, like you can assign it to your accountant to be your expert to send stuff back and forth, but you can also have it be a payroll expert, you know, pending what you've got in your package, you get some other options there, okay? You also have manage your Intuit account. So if you have more than one business, you have more than one account, you obviously have that information there, okay? But those are your big preferences is inside of here and accounts and settings and your manage your users, okay? Any questions about that right now? Let me see if I can make the font larger for you guys to be able to read. How's that, Jennifer? Perfect. Glad that worked. Okay. So that's really the big preferences for you. Okay. So now let's go back, jump backwards a little bit because we couldn't see our chart of accounts until we integrated our bank account. And so some of that is obviously because we'd have in QuickBooks size, no reason that we should be able to see the chart of accounts. So if we click our little gear icon up here, you have your chart of accounts but option now. So again, chart of accounts. Based on this QuickBooks subscription, we can have up to 250 accounts, okay? That for most businesses is probably pretty good. Not all of these accounts are things that we created. So we'll kind of look at some of the ones that like are automatically here and then kind of go from there. So we have a cash account. Well, I don't do anything with cash, so this is not an account I'm going to use. So I personally am going to make it inactive. That way it goes away from my list. It's not something I need to worry about. Okay. It was something that just auto populates with this account as something that I would have in here because a lot of people might potentially use the cash account. Now, not only is it not in this list, but you couldn't select it in any sort of categorizing in the downloads or the importing data to categorize anything into that account. Okay. So really important. Now, if you scroll down, there's other ones. Accounts receivable. This is automatically in here. Allowances for bad debt. This is automatically in here. And cash for employee advances is in here. Inventory is in here. Loan to officers. You know, so because of the fact that I said I was an LLC and I was an S Corp, it automatically populates some of the basic accounts in here for me. Okay. Which is good. You're going to use some of these and some of these you'll never use in your world. And so you can, you know, make the ones you're not going to use inactive and you can use the ones that you're going to use. But it's always good to look through and see, like you're probably going to use furnitures and fixtures if you have office equipment and you have office, you know, desks, might be laptops, might be printers, you know, things that are going to cost more than a couple $100, right? You might have improvements. If you own a building and you're doing massive improvements, or you own a campground and you're doing massive improvements to the grounds or to a cabin or, you know, to a lodge, any of those types of things. Okay. If you own any land, you're going to have that in there. Okay. It might be a one-time thing unless you're purchasing and selling land all the time, but you're going to have it. You know, equipment. This could be any expense over $1,000 is usually what we say goes here because it's a fixed asset, right? You're going to want anything that you have that's of value. So some of this is going to be like one-time entry stuff. Some of this is going to be you only upgrading every once in a while, but you'll know that stuff. Vehicles, same thing. Okay. As you get farther down, you get into, you know, do you have a line of credit? Awesome. You could probably use this, but let's rename it. So if I click down here, I can click edit. And so instead of saying line of credit, I can say Citizens LOC because I have a line of credit, right? It is still a line of credit. It tells me it's a line of credit and I can hit save and close. But now I can use that account and I didn't have to create it. I just renamed it. Okay. As you get farther down, you get out of all the things that are on the balance sheet and we start to get into things that are going to be on your profit and loss statement. Treasury stock. That's going to be on that's probably the last thing that would be on your balance sheet. Okay. Owner's equity, you know, beginning balance equity, those types of things. Okay. Then when we get on the profit and loss, you're going to see like billing and expense income. You might see sales. And again, you might not just want to see sales. You might want to see the 3 or 4 different income accounts. So you could edit all of these and rename them so that you could use them if you wanted to. Cost of goods. It gives you an idea of what are your cost of good accounts: labor, equipment rental, freight, supplies and material. I obviously don't do equipment rental, but pending your industry, you might, right? And so these are all sub accounts, as you can see, they're indented here, of cost of goods. Okay. Now it's important when you look at the chart of accounts that you have these mapped properly, meaning that if you want it to show under cost of goods, you have it as cost of goods, because otherwise it's just going to show as another line item somewhere on the reports. And I will show you the reports, so we will look at them so you can see the difference. Okay. Same with advertising. There's different types of advertising you could have, bad debt, licensing fees, commission fees. Okay. So they don't have, credit card fees in here. I didn't see any meals or entertainment in here. I didn't see some of the, automobile expenses. Some of those expenses that I know that I have, right, are not listed in here. So I would have to create some accounts. So we talked about how you could import. So if you went back up here, you could import data. And obviously it would be a chart of accounts that you could import. Okay. I am really focused on making sure that I just manually enter them. So if I go back into my chart of accounts up here at the top, I'm going to have a new. Everything when you click new is going to try to have you do it as a bank account, cash on hand. Okay. So I have to change this to say that it is an expense account. And then I'm going to say it's auto. Expense. Okay. Now that's not advertising or promotion. So let me click down and see if I can't find a better option for me. And again, these are just the ones that are here. So you don't have to use any of these, but I tend to like to use one of them. So they have an auto right there, and I'll hit save and close. Okay. So now if I search up here, there's my auto. It exists. So I added it. Okay. Again, you can edit, you can make inactive if it's something you're not going to use. Now, if you make something inactive and it comes out of your list, as you can see, we'll go back. The cash account is still gone. If I click under settings, I can click include inactive and then see how it says deleted. That's how you know it's inactive, and you can make it active again if you needed to, but it comes back into the list. Most of the time it keeps it off just to keep the report clean, because obviously if you've made it inactive, you're either not using it anymore or you're going to use it, period. Okay. So I always tell people, go through and look at it. Again, you have 250 accounts that you can add on top of the ones that are already here. So I encourage you to clean these out so you don't have a bunch of things floating in here that you don't need. But also if you can rename any of them, because there are items that you are going to use, that you can do that. And then it doesn't take away from the 250 accounts that you get. Okay. Any questions about the chart of accounts? So let's see here. There are a few accounts that you probably will not be able to make inactive, or if you have an account that you have used in the past, it might not make you make it inactive. For example, retained earnings would be one of these accounts. It won't let you make it inactive. You just have to kind of leave them. And then obviously just make sure that you don't use them. It's usually only the accounts that you normally would not put any transactions in or edit that it doesn't allow you to make inactive. It won't allow you to delete any account that has transactions in it, but you should still be able to make it inactive. QuickBooks Online does not have a merge duplicate account feature, sadly. You either have to do a journal entry to move the data over, or you have to move every individual transaction, and then obviously make the other account inactive. QuickBooks Desktop does have that feature, but sadly Online at this point does not. I will tell you, it is one of the things I think people are asking for, so maybe it will come eventually, but at this point, it does not have it. Paula, can you give me a little bit more information on what you're asking? It says, in making these accounts, how are numbers made for these individual accounts? Are you talking about like you will name cash account 6,000 type of thing? Okay. So if you click edit, it actually has to be, well, let me not do a synced account. Sorry, hold on a second. Let me get. It has to be something you set up in the preferences, and I think only the enterprise level has it. Let me look here. Yeah, so it's actually under, if you go under here in accounts and settings, it's under the advanced tab where you can tell it that you want to have those numbers.
Okay.
So you would do it under advanced tab, and then let's see here. Oh, right here, enable account numbers. So I have it off, but if you turned it on under your account settings, then you could enter it. Yes, Paula, yes, that's how you could do it. If you import it and this is enabled, it should populate for you to be able to make sure that those numbers lined up with whatever the Excel sheet said. So Ashley, how do you categorize a personal transaction? For example, if I use business debit for personal expenses, it's either going to go into owner's draw, members equity, shareholder distribution. It just depends on the type of entity that you are. We aren't focused today on categorizing a bunch of the transactions. That's more of next week's class, but we can talk more about that. But yeah, it would go into an account like that where it doesn't show up on your P&L as an expense for the business. Any other questions about the chart of accounts? Okay, perfect. So let's talk about, now that we've synced a bank account, we've categorized a few random transactions, but we'll talk more about that next class. Let's talk about the reports that we would use, okay? So if you go over here and we want to go to business overview, you'll see that we have a tab here called reports. So QuickBooks automatically made these 3 reports favorites, okay? Which is probably true in a lot of areas. The 2 most reports you're going to use are a profit and loss and a balance sheet, okay? Then people who do invoicing in here, which we're not going to talk about today, but you know, you would use an accounts receivable. People that are going to do the bills are going to use an accounts payable. Oh, I actually didn't want to actually click into that. I want it to populate. Okay. So you can do custom reports. You can manage reports. These little stars mean that they're your favorites. So as you can see, as you scroll down, there's a lot of other reports in here. As you can see, you can search reports, accounts payable. You can search, even though I don't use payroll, you know, you can search some of the stuff in here. So always feel free to use the search icon. If there's a report you want to look at that you didn't have, like here's our accounts payable, I would click the star. And then if I scroll all the way back up to the top, now I have 4 reports, right? So they're trying to make it easy so that you can keep the reports that you're going to use the most, obviously at the top, but they have tons and tons of options of reports, okay? So if we look at a profit and loss report, it's going to show the one expense that we've categorized so far, okay? You have the option to change the time frame up here. Okay, so this is doing this fiscal year to date. You can look at last month, you know, you can actually type in the date here if you're looking at it that way. If you want to view this by month, it'll show it by month. So you can see more detail, do side-by-side comparisons. This is beneficial when you're comparing reports month over month. So your subscriptions would be one, utilities might be another that you would want to see side by side by month. Income, obviously, so you can see if you were up or down in income. Your accounting method, most of us are probably cash, but a few of us might be accrual. Obviously, that's important when pulling the reports. If you invoice inside of QuickBooks, if you pull an accrual report, your sales number will be inflated versus if you actually pull a cash report, which tells you the stuff that has only been paid. Okay, so you definitely want to do that. Obviously, you can change and do comparisons down here. Again, you can do this by totals only and click run report, and it's going to do a consolidated report. You even can then take this report and put it in Excel, make it a PDF if you're sending it to a business coach, anybody like that. You can print it, you can email it, and then obviously you can make it a compact report or non-compact. That just depends on a preference for what you're looking at, okay? So you have some options here. Again, you still have customize at the top to see some of these options as well. All of these items that are listed here are mostly the same as these here. Okay, so it's just a couple ways to see it. If you were to get on this screen and this item were to be gone, that's okay. It's usually a wizard type of thing here. Okay. I tell people to look at your P&Ls on a monthly basis, as your accountant might look at it as a quarterly basis, because you would make quarterly estimate payments if you were to owe. Again, and then obviously you can look at it on a monthly basis or an annual basis, pending what you want to see. Everybody looks at it differently, but your P&L is going to show all your sales and all your expenses. Okay, so it's definitely important that this report gets accurate. Now you'll see that of all of the things on this report, there's only one item in here. But if you go back to our actual bank transactions, none of these are showing in the P&L because they're not actually categorized yet. So you have to categorize these before they populate on the report. So just because they're sitting in the for review tab, see the for review tab, doesn't mean that they are actually affecting your profit and loss. So I tell you that because it's important. If you're going to take somebody a copy of your reports, but you have 400 transactions sitting in here, like I do, the reports are very inaccurate. I always try by the 15th of the following month. So the 15th of June, I had May numbers done. The 15th of July, I'll have June numbers done. Because again, it keeps everything very fresh, but also then keeps everything kind of moving. So then my reports are obviously accurate. So I might still have stuff in for review, but it might only be June transactions. Okay. But once you categorize these, then they show in the reports. Okay. So then if we go back to some of the other reports that we want to see, balance sheet would be another one. Okay. So our balance sheet is going to show cash we have on hand, any credit cards, any fixed assets, any loans, and then obviously our equity. Okay. So it created automatically an open balance equity account. This is because when I synced the bank account on January 1st, I had a balance in my bank account of $4,300, right? So it's going to put that in here automatically. Obviously, if you're merging or starting data and you've already run it a different way in prior years, you're probably going to have this. If you're bringing data from QuickBooks Desktop to online, you won't have this. If you are starting a business from fresh and you're doing all the bookkeeping from square one, you're not going to have this. Okay. And this is an account that doesn't ever go away. It just sits there. Because that's how they were able to make it so that if you were to reconcile the bank account, it would actually match. Okay. Retained earnings is something that's going to populate year over year based on how the business does. And then obviously net income is, profit comes from the profit and loss. If it's been profitable, it'll be positive. If it's negative, it'll be negative, those types of things. Your owners or personal charges will show up underneath equity. It'll say owner's draw, shareholder distribution, those types of things. You'll have that. Again, the balance sheet gets bigger or smaller pending how many different items you have: credit cards, bank accounts, loans, fixed assets, those types of things. Issue with the balance sheet is when you have a negative number in an account that shouldn't be negative. For example, if my bank balance was negative, I would know something was wrong with my balance sheet, right? Because Usually as business owners, we don't leave a negative bank account. Same with credit cards. If credit cards or loans are negative, then something's wrong. Okay. Now this number here is clickable. Now I don't have a ton of transactions that's going to show in this list at the moment, but it does show you the list of anything that would be categorized. So as you do more and more of this, this list gets longer and longer and longer and longer, right? So you might only want to look at a certain time frame. Now, this is what I was talking about with the buttons. So if I switch this to classic view, this is what the view used to look like versus the fact that they're trying to do the updated view now. So you have the option to do the modern view or do the classic view. You'll see this button on random screens throughout QuickBooks in general. Okay. Now, if I click this back to summary report, it takes me back to this report. Okay. And I can go back to my report list at the top here, and I'll go into my profit and loss again. And again, this number is clickable, and it would show me all the activity for whatever time frame I was looking at that would show in this list. And again, I can switch it to classic view. It's just easier to see. Okay. Now, if I had not entered a name, all you would see is the description and the account that it was categorized in. Okay. So it would be hard for you to know if it was in the right account if we don't put a vendor or a name in. So you definitely want to make sure that you type in vendor's information, okay, so that it has detail in here. Any questions about the reports?
It looks like Jennifer has a question about what's your favorite comparison report. Did you already cover that?
I did not. So I like to look at the previous year comparison. So if I look at, let me pull up, I'm just going to search it because it's easier than digging through the list. Profit and loss comparison. And then obviously I don't have anything to compare in here at the moment, but I use the January through June of 2023 to compare to January to June of 2022. You can change this to do just by a month. So if you do this month and run the report, let's see here, compare previous year. You can do it just by month. You could do it whatever time frame you want. But my favorite one is the comparison. When I'm talking to clients personally and I'm going over all of the things that are happening in somebody's business, or especially with the COVID stuff, you know, for restaurants and items like that, like we wanted to see, how did you bounce back? How did we do over the course of the last few years? You know, what was the numbers? But we look side by side. So last May we did X, this May we did Y, and this is what changed and whatever. You can add the percentages. Some people care, some people don't. If you click on here, you could do the change percentages. You could do a percentage of income. You have any of those. That's more of up to you. I can do some of the percentages in my head, but most of the clients that I'm working with, because they are small business, just like to see the number change. They don't necessarily care about the percentage. But Jennifer, if that's something that's important, absolutely feel free to pull that and look at that. I think the chat doesn't have any questions. I think it's just everybody communicating.
I think there's a comment from Paula about generating a donation receipt for a nonprofit. Excuse me.
Let me see here. Where did you see that one?
It's in chat.
Okay,
at 9:27.
9:27. Okay, I wasn't quite down. Paula, there is not particularly a QuickBooks nonprofit donation receipt. You could do it as a cash receipt. We do talk about that in the next class. So if you want to table that for next class, we can absolutely go over that. If you want to reach out to me individually, I don't want to jump into a rabbit hole of something we're not going to really cover today. But I'd be happy to work with you individually and go over that with you. And I think that was everything, is it?
Yep, I think we're good.
Okay, perfect. Just making sure. Okay, so right now I would say let's take a break because I need a little water for my poor voice. And when we come back, we're going to take a 15-minute break right now. So it is 9:30. We'll see you at 9:45. When we come back, we're going to talk about the IRS regulation accounts, and that's going to take up about an hour. So it's a good time to take a break before we dive into that. Okay, guys?
Sounds good.
Okay, guys, I did take a brief second just to kind of scroll up in the chat because obviously there's a good chunk of you in the training today, and I wanted to make sure that I didn't miss anything. It looks like there was a question just that says, you know, what if you're going from Quicken to QuickBooks? Nicole, I've not actually done that merge before, I won't lie. I'm sure it can be done. It's probably going to be an export and an import item versus actually like just loading it through. But Nicole, if we want to connect after class today, we can go over that in more detail since that's more of an individualized item. But I have no problem seeing if I can't help you along with that and obviously working through it. And then it looked like we had a concern about maybe some audio issue. Is everybody hearing me okay? Okay, perfect. So it looks like pretty much everybody else can do. Okay. And then last question I'll cover before we dive back in is from Kim, and it said that they have an existing business, but they did not use QuickBooks, and she wanted to import previous data. You can do that, Kim. It's just a mass import as an Excel sheet. It actually is done under import data, and then you can do, I believe, just a P&L. Again, if you want to reach out, since that's a very individualized item, I can absolutely go over that with you, but it can be done. You can import that information so you can do some comparisons. Perfect. Okay, so our next topic, and probably the longest topic we'll talk about all day, is going to be talking about determining categories based on the IRS standards when categorizing expenses inside of QuickBooks. Okay. I spent a lot of time going over this because there's a lot of things that can fall into a lot of different buckets. And we definitely want to make sure that you put them in the bucket that fits best for your business, not because it's better or right or wrong per se. Okay. But also so that you have some understanding for things that maybe you wouldn't have known, that you would have stuck in an account like Ask My Accountant, and you would wait until you had a call with whoever helps you with your financials, business coach, accountant, and so on, to ask questions. Okay. Now, I still to this day use the Ask My Accountant bucket for my clients for things that I don't know what they are. Okay. Sometimes it's because I have clients that are out of the state of Ohio and I need to figure out what is the business, and Google didn't help me. And sometimes it's because I'm not sure that it's an actual business expense. Okay. And so I stick it there so that it reminds me to ask somebody about it so that I can determine one way or the other. Okay. So in the PowerPoint and on the next slide, you will see a list of the IRS regulation accounts and then a brief description on what meets each of those accounts. Okay. And we're going to go over every account. But for example, we use Chipotle. So the payee is Chipotle or vendor is Chipotle. Okay. The category is going to be meals. Okay. And then the action is that we needed to add it. Okay. Now, there are meals is a complicated bucket. There are multiple levels of meals now. Okay. There are meals that are 100% deductible. There are meals that are 50% deductible. And then there are meals that are not deductible. Okay. So you got to be a little bit more specific about that, but you have to understand the thresholds for all of them. So the meals that would be 100% deductible is that you are taking out your team to eat, okay? Or you are meeting with an investor. That is 100% deductible meal. A 50% deductible meal might be that you went out to dinner with a business coach or a potential client or, those types or a potential employee. Those would be 50% deductible. Non-deductible is like you went to a Cavs game and bought a suite and you put food in the suite. That's considered more entertainment, and that's not a deductible expense anymore. Okay. Or you used the business card to just go get lunch, but you didn't do anything business wise for lunch. That would be another one. Now, as an accountant, can I tell you all three of these buckets? No, I see that you went to Chipotle and you ate food, right? So I would have to ask. Sometimes if it's a bigger meal, meaning you go out and spend $300, $400, $500 on a meal, I know that you're obviously wining and dining somebody, right? Versus just going to Chipotle and buying a meal. Okay. So you would want to leave yourself maybe a memo note, those types of things. Okay. So let's start to look at these accounts. So again, you guys have this in the PowerPoint, but we are going to go through each and every one of these so that you guys have an understanding, and I'll use examples as we go. Okay. So employee wages. This is wages, salaries, bonuses, commissions, vacations, sick pay. If you paid COVID pay, any of that stuff is going to fall under here. You can make this bucket again as detailed as you need it to be. I usually see wages or salaries, is the same bucket to me. And then I see bonus, commission is the same bucket. And obviously you would say vacation, sick pay, PTO type of pay. Okay. On top of that, then you would have, the taxes that go into those. Okay. So you'll have payroll taxes. This is the Social Security and Medicare tax, the unemployment taxes, and the federal unemployment. Now, when we're looking at this for you guys, what we want to see in payroll taxes is only the employer portion of those taxes that you pay. Okay. And the reason for that is because the rest of the taxes that you pay on behalf of the employee would just be considered part of their wage and salary. Okay. So you definitely just need to see your portion as the employer of Social Security, Medicare, and then the unemployment taxes are yours. Okay. So those two play hand in hand. Now it is still, if you want to put them as sub accounts, important to do that because that's still your total cost of payroll. The other item that might get put in with payroll cost is going to be, if you're paying for a service to run your payroll, whether it's QuickBooks, your accounting firm, Paychecks, ADP, Ahola, Paycor, whatever the agency might be, your fee there might be included in that. Okay. Then you have employee education expenses. So this is used in some areas and not in others. I have educational expenses to keep my employees up to date with all the things changing with COVID and all the things changing in tax law and all the things changing in the world. Stylists have this because they need to have their people go to classes to learn the new beauty hacks, the new highlights, the new nail dip, the new this, the new that, right? You're also going to have education when it comes to dentistry or a medical field. They have to go learn new things and they have to learn new lasers and keep up on all the codes and all that kind of stuff. So you're going to have education in a lot of different areas. Okay. This is specifically an employee went and did something that benefits your business is what they're being done for. Okay. Not just that you hired a college kid and you're reimbursing them. Okay. Employee benefits. So this could be health plans, if you do any dependent care, life insurance, those types of things. This really plays more into the health insurance for most of us. And then obviously as an owner, if you're paying your life insurance and some of those things through the business, those are going to come out. I encourage that you don't just call it employee benefits, that you sub-account all of the things that you're categorizing underneath there, because it's going to be really important that you know what you spend on life insurance versus health insurance, because some of those items aren't really deductible at the end of the year. Like we don't write off life insurance. So you definitely want to pay attention to that. Okay. Rent expense. This again has a couple meanings. It could be office rent. It could be equipment rental. It could be that you run at a storage unit, those types of things, vehicles. Again, keep it detailed. If it's just called rent expense, I make the assumption that it's office space. If it's anything other than that, I put equipment rental as the option, or auto lease or auto rent, those types of things. Obviously, again, auto renting can be something that might be more mixed into travel expenses, because that would be the time you would get a rental car, is if you were traveling and those types of things. So just again, keep the detail, but rent expense could qualify for all of these buckets and you could lump it into one, but I encourage the detail. Taxes for property, if you're paying to your landlord and an accrued amount based on what it is over the year, and then he gives you a different amount, you want that. If you own property, that's going to be something. Obviously there's taxes on vehicles and those types of things as well. Again, keep it separate but detailed as best you can based on the things that qualify for your business. Okay. Then you have like business interest or debt trade or business. So this is all the loans, line of credit, credit cards, liabilities, trades, all that kind of stuff that would come into play. Now, some people like to see loan interest or mortgage interest over credit card interest, right? At the end of the day, it does matter to make sure that you put the correct interest charge on the correct loan, but it just is considered interest when you put it on the tax return. So it doesn't necessarily matter if you say credit card interest versus line of credit interest versus mortgage interest. You just have to make sure that you have an interest expense bucket. Now, when people are factoring EBITDA, at the end, if you're trying to sell or do any of those types of things, interest gets added back in. So that's why it's really important to make sure we track interest properly. Interest is one of the things people forget about. Your car loans have interest, your mortgage has interest, your line of credit has interest. You might have other loans on equipment that have interest. That's really important. And people tend to not track interest very well in the QuickBooks because they get an interest statement at the end of the year. But you should be reconciling, which we'll talk about next class, your loans and stuff, which means you would be categorizing the interest in here on a regular basis. Okay. Then we want to talk about real estate taxes. So obviously this is property taxes on any real estate you might own. If you are a real estate company, meaning that you own 70 or 80 properties and you're renting all of them, QuickBooks is not the best software for managing real estate. It can be done, but it does require a lot of creating of invoices and marking stuff paid in order to account for things properly. And then obviously in real estate, you need to match every expense by each individual property. And so then it has to be really detailed with that. Again, real estate taxes can be that you're paying them because you own the real estate, or again, if your landlord bills you for their portion of real estate based on the size of your suite, you could stick that in there. Okay. Exercise tax. This is not something that I do a lot with personally, because I just don't have any clients in this realm. But this is your alcohol, tobacco, and fuel tax. And so you would file that appropriately, and then you need to show it in a different bucket. I would probably call it, fuel tax or tobacco and alcohol tax, not just exercise tax. That way you know exactly what it's for. And that's, again, a very niche industry. Those that use those buckets know a lot about it. Okay. If you have a personal property tax bill, obviously you can name it property tax, but you want it to go under an equity account as a draw from the business. If you are personally using your home as a home office, then you get to write off a percentage of that expense, but you still don't get to take it in full. So again, you just want to make sure it's named personal. That way you can put it in the right bucket. It's going to be considered equity, not an expense, so that it doesn't impact your profit and loss. Okay. Insurance premium. This one again has a lot of buckets we can look at. Create sub-accounts for the main buckets: liability insurance, auto insurance, health insurance, right? Those would be the big ones. You can have workers' comp in there, some of those other ones as well, but you don't want to just put all of the different types of insurance under insurance premiums in the name, because then you won't be able to determine how much you spend on what. And obviously, if you're looking at side-by-side comparisons, you want to see if your insurance went up, especially those of us that maybe have to do insurance audits every year based on to make sure we have enough coverage or not, if we can downgrade our coverage, those types of things. You definitely want to know. I always like to,
Hey,
yeah.
Ann, you can track your expenses by department codes, right? Or location. You should be able to do that, right?
You can use them by classes, and your classes you can set up as department codes or locations. Yep.
Okay. And you cannot write off credit card interest, right? For anything?
You can write off credit card interest if it's business credit card.
But not the interest.
Why couldn't you write off the interest?
Well, it would mean that you paid it late.
Well,
If you
it could
paid-
be that you paid it later, paid it over time. There is a difference. If you're paying it over time, you should be able to write it off.
Okay, all right.
Yep.
Thank you.
No problem. So yeah, so the insurance premiums, obviously, again, if you're in real estate, you would need to know for each individual location or department code. So you would set up a class to be able to do that. We'll talk about setting up classes in the next couple classes. I don't think it's next class. It might be the class after that. As that's one of the final like customization features. The self-employed health insurance, obviously, I work with a lot of small businesses, so this is really important to them that they pay medical, dental, whether they're paying it for their spouses or their their employees, spouses, kids, dependents, those types of things, making sure you have that listed out. And then you'll have startup costs. Startup costs are obviously like if you bought a building and you're doing a bunch of work to get it ready to use, if you invested a lot of money to get your business started. Personally, for my business, I had to invest in a QuickBooks subscription, a computer, a printer, some travel, a vehicle, and a few other things. So I had some bigger purchases in my initial startup of a business, and those depend on what you're doing, and then obviously how you get to deduct those expenses. Most of the startup costs has to be broke up over time, pending what it was, because you obviously don't always have the sales. I opened my business in November. I didn't really have any sales till January, so I spent November and December spending money and networking and doing all those things to be able to then have a good year the following year. And so November and December, I didn't write off everything for that tax year because I didn't have any income against it. And so some of that gets moved around as well. Your startup costs obviously can also include, like, do you know that it takes 90 days to train an employee, depending what your niche is and what you're doing? And then you obviously, need to know what it looks like against what they're bringing in, and then obviously know if you have break even points and all sorts of things like that. But you definitely want to make sure that you track some of that. It doesn't have to be perfect, but those are some of the ideas for startup cost. Okay. So I think I'm going to pause here before we go to the next screen for the next list and see if we had some questions about these, because I saw that we had some questions, it looked like.
Looks like there's something about writing off, saying you can write off bad debt for a client's invoices unpaid.
Correct. So you can. So there's a couple ways to do it. It depends on, there's a couple caveats here. It depends on if your business is a service business or if your business actually puts out cost and material in order to do the work. Okay. So if you put cost and material out, obviously if the customer never pays you, you're paying your supplier. So you're getting those deductions right away. And what you would do is you would zero out the invoice by creating a bad debt item. You could do it this way, bad debt item, and then putting whatever the dollar amount is they didn't pay you as a negative number, and then that zeroes it out. So it takes it out of your sales. You never got the income in, so you never have to claim it, but your expense was taken when you paid the supplier, not necessarily the fact that you didn't get paid. Okay.
I think the example that Alicia is asking about is landscaping, which would be a service, right?
Correct, would be a service. Yep. So you just would have to do, you could void the invoice. You could create a discount item that says, discount. It would come up under discount on your P&L, but in the invoice it would show as the bad debt, and you would just zero out whatever the amount was for. So if the invoice was $1,000, you would put a negative $1,000 in discount, which zeroes that out. That's how you write off the bad debt. You don't get to not claim the sales and then also write off what you didn't collect. Does that make sense? It should just zero out to nothing. The only time you get to write off an expense is if you actually paid for material.
Okay. And let's see, there's a new question here. Let's see what it is.
Alicia, we aren't going to get into invoicing today, but when we do get into invoicing, I'll make sure to cover that for you. Okay.
Yeah, Ashley's asking about a business meal if I'm working as a hairdresser and grab lunch, or if I'm a truck driver and I have to grab food. Kind of depends if your employer pays for that, right?
It does.
Truck drivers, sometimes meals are paid, sometimes they're not.
And truck drivers get per diem. So the
Yeah.
truck driving one is hard.
Yeah.
The hairstylist is, I'm going to venture to bet you might be a booth rental. So you're your own employee. Could you write it off occasionally? Sure. Is it best practice? No. I would say usually if it's just you grabbing lunch, it doesn't really count. If you're scheduling appointments while you're sitting at lunch, it's a little bit more, it counts. If you meet a client or take another fellow stylist out, or you're doing, in between an educational class, then yeah, it definitely counts. But if it's just a regular day grabbing lunch, it's, you're in a gray area. You could do it every once in a while, but it's not best practice.
That was a good question, though.
Ed, do you see any other ones?
Yeah, I'm not seeing anything. If we've missed your question, now would be a good time to throw it back out there again. Let's see. Camille has a couple questions. If you take an investor or investors out for dinner, yeah, I think you could write that off, right?
Absolutely. Yep.
Yeah.
That would be considered like a business meeting meal, because you're trying to either get them to partner with you, or they're already partnered with you and you guys are closing on another property, those types of things. Absolutely. I will tell you, I am not a stickler about the meals. I trust with what you guys, what my clients tell me. It's not an area that they're going to audit unless you're doing, tens of thousands of dollars a year and you're living lavish lifestyles. But they do get, we do get picky about alcohol. If you have a $500 tab at a bar, I'm not going to let you write it off because, alcohol is not always business meeting, right? So there's what we call reasonable dollar amounts in the meals area.
Yeah. Robert's asking about if he's at a conference, is that deductible?
That is deductible. Yep. Mm-hmm.
Or if I'm what if somebody investor takes you on vacation with them?
Well,
go ahead.
If an investor's taking you on vacation, I hope they're paying for everything.
Yeah.
But if you're traveling and you're traveling for business, whether it's a conference, a vacation, because we're with investors actually doing it, you're probably in a pretty good spot.
Really comes down to whether your boss, well, in my situation in the old days, it would be whether or not your boss would sign the expense report,
Yep, exactly. Exactly. And I liked, for me, I buy lunch probably once every 2 weeks. I'll get pizza or something for my team here. For the ones that are in the office, not everybody works in the office all the time, but I try to do those types of things as appreciation for their hard work. I do it more often in tax season, our busy, crazy, obnoxious season, versus the summer where I kind of let them do their thing. So you'll see there be trends in it. But we don't spend more than like 3,000 or 4,000 a year on it. But that's what's reasonable in my industry. As an accountant, I don't really go do a lot of business lunches. I don't do a lot of marketing for some of that stuff. So it's not reasonable for me, where another nonprofit doing all these events and, rewarding volunteers and buying muffins, those types of things, like you're going to have a bigger budget in that, or a bigger reasonable amount because of what you're doing. Okay, so I think we've answered all of those. So then let's go to the next screen. So obviously we've talked a little bit about the bad debt. This is an unpaid amount from a customer for a service, which we want to deduct the invoice for the bad debt, because obviously it's something we don't think we're going to get paid for. Now, I will tell you that when we talk about the invoicing, we'll talk a lot more about this and we'll go over it. This is a really important thing to track, because especially, for example, in landscaping, you don't want to get burned again because that customer comes back 3 years later and you didn't remember that they didn't pay you. Do work again and they should be on your like do not service list type of thing because they didn't pay you. Where if you track the bad debt in QuickBooks by zeroing it out and creating that line item, even if it goes into what's called discount so that it doesn't show like a bad debt line on your P&L, though if you want that, it totally can. You have the ability to see that that customer didn't pay you, so you don't do business with them again. I use the same thing. If I do a tax return and the person doesn't come in, sign their paperwork, and pay us, then the next year when they show up and need their taxes done, they either need to pay 2 years worth up front because I'm not going to do the work for free again and wait a whole nother year to get paid, right? Or they don't get serviced from me. And I track all of that because I obviously create invoices as I'm doing all the tax returns. It doesn't happen very often in my industry because a lot of what the work we do is cash basis work. But if you are a landscaping or a contractor, you're doing the service before you're getting paid because you might only be billing, every so often on a project or once a month because that's how often you mow grass or, however that works. So there are industries that sadly have more areas that you don't get paid than others, pending what your service offering is. But it's important to track the bad debt, okay? Reimbursement for travels, meals, and entertainment. This is transportation, the Ubers, the Lyfts, all that kind of stuff. Airport transportation, if you have private taxis, if that's justified, or limos, pending who you're moving and what you're doing, obviously that plays in. This is also going to have where you can have the meals. So again, you were at a conference, you had meals that you needed to pay, you would put that under travel meals, it would be a sub account, and that would be 100% deductible because obviously if you're not at home, you can't eat, at home, you have to eat while you're on the road, okay? Hotel expenses, resort fees, those types of things. Again, if you're at a conference, if you've had to pay this, even if you get it back, you want to track it. Obviously, if you get the money back, you just put it against the expense. And then, certain things are deductible up to a percentage. Entertainment is no longer deductible. They got rid of that bucket. So I know it says meals and entertainment are subject to 50%. It is just meals at this point for some things. Again, pending what type of event you're at, it will determine if it's 100% deductible or 50% deductible. Okay. Then we get into advertising. So advertising is one of the buckets that has things that can kind of fall into more than one area. Okay. This is business cards, websites, flyers, any of the things you might be paying for, like Constant Contact, MailChimp, anything that you would be doing for advertising. If you decided to pay to be in a booklet, go to a golf course and do a sponsorship on a hole, do a parade, those types of things are obviously all going to go under advertising. Now, website is one that could fall in another bucket because your website's probably hosted on something such as like a GoDaddy. Okay. If you're on GoDaddy could be considered a dues and subscriptions, but it also could be advertising. So that's some of the things that really matter to you. Advertising, I tend to see a couple sub buckets. I see, mail advertising, internet advertising, and then you might see like Facebook or TikTok or whatever, some of those things are, so that you can determine where you're spending the money. And then obviously, hopefully you're tracking on the other side to make sure that you're getting the money back that you're spending out in, services rendered and that type of thing. Okay. So advertising and marketing. Then you have trucks and car expense. So this is gas, repairs, registration fees. If you track mileage isn't something that's going to go in QuickBooks on a regular basis, but you do want to track it. I always encourage people to either keep a booklet, use Miles IQ, or actually QuickBooks Online does have a miles tracker inside of it, especially if you're in the self-employed version, which is the basic version. Okay. I do like to see the difference in the expense. So it would say car and truck expense, and then there will be sub accounts that say gas and repairs, because those are going to be the two things that I like. And then obviously registration fee can go under car and truck expense just as a generic expense, or it can go under license fees. Those types of license and permits, I guess is really what it's called. Because obviously that's what it is. You're getting a license fee for your car, you're getting your little sticker, those types of things. But definitely want to, keep it separate. even more so in this realm where we talk about gas, for the landscaper out there, you have to track the gas you're using in vehicles versus the gas you're using in equipment. And even more so if you're using diesel versus regular fuel. So you definitely need to then create another item that would say like equipment gas or equipment fuel or something like that, because that's different deduction wise than if you decide to take mileage over the car and truck repairs of gas and repairs. Okay. So you definitely want to keep that separate because the equipment gas is you get to deduct no matter what. Okay. We have charitable contributions. This would be if you're donating to a charity, donating to a church. People get hit up for sports teams during the summers, to sponsor a baseball team, those types of things. Obviously, this all goes into there. You don't need that to be super detailed. You just need to be called charitable contributions. And then obviously you can put the name and the information for the event so that you have it. At the end of the year, based on the type of entity you are, some of you get to take it. Some of it gets flipped onto a personal Schedule A form. Some of it, the CPAs might tell you might have actually qualified as advertising. And so they might move some of it out of there. It just depends on what's in the bucket and obviously the detail that you give your accountant for how you helped. Things that we wouldn't put in QuickBooks are like non-monetary deductions. So if you donated old desk or an old whatever and you didn't get any money for it, you get to write it off, but it's not going to be a dollar value inside of QuickBooks. So you still need to track those donations, obviously, because you'll need them at the end of the year, and then your accountant does what they need to with them if they qualify and meet the thresholds. Okay. Club dues and membership fees. These are, if you're paying for Chamber of Commerce, any real estate boards, any of the subscriptions that you might need to do certain type of things, educational subscriptions, if you're paying to be part of chambers, those types of things is going to be what's going in here. Not all of these, again, are deductible. If you are a member of a country club, that's not really a business expense, right? Even though it says club dues are there, unless for some reason your business runs through the country club, but so you just have to pay attention to that. Obviously, Chamber of Commerce total deduction. If you're doing real estate, the MLS, those types of things, those are all deductible because you need to have all of those. Any of the association fees that you need, obviously, that qualify in your industry, those would be deductible. Okay. Your franchise, trademark, and trade names, obviously, when you file them, there's a fee associated with them. And then obviously they need renewed pending how long. You need to track that. If you're part of a franchise, I work with Mosquito Joe and a KOA. So they have franchise fees. They pay back a percentage of their sales to the franchise. Sometimes it's more during their busy time of year and less when they're, slow. But you need to track that. Again, those are deducted in different ways, pending what it is for. If you're doing trademarks and patents and all that kind of stuff, some of those become assets and things pending what it's for. So, you have some of that, but definitely keep it as detailed as possible for you on the P&Ls for those. You have interview expense allowances. This is, if you're spending money to get applicants, you're spending money to do open interviews, meaning you had to get food or coffee or bagels, those types of things. Obviously, those are deductible. And then, if you're having to travel, so sometimes people go to the universities to interview or do panels with their, potential graduates to see if they're a good fit for their organization. Obviously, those would be expenses that you could do. And then those meals would be up to 50% deductible that you would eat while you're on the road doing these things. Legal and professional fees. This is if you're paying for an attorney. This attorney could be doing your operations agreement. This attorney could be doing something because you had a lawsuit. This attorney could just be doing a contract review or contract work or an HR booklet, any of that type of stuff, you're going to pay for. Professional fees could include a marketing agency you pay to do a marketing rebuild or a campaign for you. This could be your CPA or accountant like myself. You could also use professional fees for people that you partnered with on a project. So you hired another contracting firm to do the work. So you might be a contractor, but you don't do plumbing. So you had to hire a plumber to come in and do the plumbing work on the job that you were doing. Okay. That would be one. Same goes for like if you were doing a concrete work and you needed somebody to come in and pour the concrete. Those would be professional fees. It's obviously that they provide a service or a trade to your business. There's a lot of them in there. You don't need them to be individual. You just need it to obviously be in the same area. Okay. The Better Business Bureau membership, I would put under membership fees or dues and subscriptions, not under professional fees. It's not wrong to be under professional fees, by the way. That's a preference. That, again, some of these things can go into more than one bucket. It's just where you want to see it. Okay. Tax professional fees. This is if you're paying the CPA to prepare your return, or whomever you're paying, you know, it could be an H&R Block, whatever, that you're paying for that. That would be something that you want to have. This used to be an item that was deductible, not only personally, but also for business. It needs to be seen separate for personal use. Obviously, if you're paying your CPA through the business for the business preparation, it can be under professional fees. It doesn't need to be a line item. Okay. License and permits. So obviously this is, you know, if you're a cosmetology, you need a cosmetology license. If you're a CPA, you have peer review and all those licenses you need to do throughout the years. If you have a liquor license, your real estate license, again, your business registration, you know, trade names are only good for 5 years. So every 5 years you need to renew them. And they're not expensive to renew, but you just got to do it. So that's going to be, you know, a license fee. If you're doing contracting work and you need a license to do whatever the work is, or be registered in the individual city that you're doing the work, you know, those comes in. Bonds, permits, you know, that type of thing is really going to come into play there. Penalties and fines. So this plays into kind of where you guys were asking about the credit card interest. If you get a speeding ticket, it's not deductible. Even if it's a company car, you don't get to write it off. Okay. If you don't pay the IRS and you get a penalty, you don't get to write that off. If you don't pay your sales tax and there's a penalty, or don't pay your cat tax, those are not deductible. So they do need to be a line item so that your accountant can see them, but you don't actually get to take them off as an actual expense on the tax return. Okay. So penalties and fines play into here, and those are just some of the major ones that might be out there that people get. Okay. Repairs. So like I said, you have a vehicle repair. You're going to have a like office repair, obviously, like if you paint or you need to fix a computer, you know, those types of things, you're going to have those repairs. You need to keep it separate if it becomes a major repair. And I tell people, you know, if it's over like $1,200, we need to see what it is, you know. Really, we only see that if you own the property. If you own the property and obviously you're like remodeling a bathroom, that's a big repair. Or you own the restaurant and you're redoing the air conditioner unit, and that was $10,000. Or you needed rewiring and that was $13,000. You know, some of that stuff becomes really expensive. Those repairs become big purchases, and those need to be kind of sifted out so you can see them, because you might not be able to take those in 1 year. You might have to take those deductions over time because they were so big. Okay. But painting, a new coffee pot, a repair guy coming in to look at a computer that may be a couple $100, those would be what you would see under the minor repairs. Okay. Then we have Then we have subscriptions. So subscriptions, these are things that come month after month after month. So this could be QuickBooks would be one, you know, your $45 a month. You could have your GoDaddy, technically could be under here. Your Microsoft 360 subscription, even if you pay it annually, could be here. Your I mean, not that they're deductible, but some other subscriptions, Netflix, Hulu, Spotify. Spotify could be if you have it in your office. You know, so any of those. Technically, some of your memberships could go under subscription too. You know, because obviously you're subscribing to be a member of the chamber. That's more of a preference to you. There's 2 buckets for a reason, but it could go in either one. You know, if you subscribe to an education course, that's another one. You know, it could go in education, could go there. You know, so it just depends. MailChimps, those types of things. You know, anything that you would pay on a reoccurring basis that should be a fixed rate, would be what would be considered a subscription. Supplies and material. Again, you could be detailed or not detailed with this. If you're in construction, you might have a supply and material cost of goods. If you're in accounting like me, I have office supplies. I mean, I don't need supplies and material. I just need office supplies, which is paper, ink, pens, Post-its, stickers, file folders, clips, those types of things. So it varies a little bit. Obviously, with COVID, a lot of people, specifically my nonprofit clients, had to add a cleaning supplies budget because they have to make sure that everything gets cleaned on a regular basis with people being in and out and those types of things. But you could just call it supplies and material. But I tend to be a little more detailed and say office supplies. Supplies and material, again, if you're a salon, you might have, all your supplies and material, your colors, your highlighters, your foils, your brushes, all that kind of stuff is going to be under supplies and material. So it's just about how you want it named and what you want to see, but it's all the same type of items in there. Utilities. Utilities include everything except cell phone. Telephone, you see telephone down there. Your cell phone has to be its own line item. So we definitely want to pay attention to that. And for the utilities, otherwise, it doesn't matter if you list them out to say gas, electric, cable, internet, those types of things. However, I do like to list them out myself so that I can see how much my gas went up compared to last year. Because as you know, you can shop the rates. Sometimes you can be put on budget utilities. And then on top of that, you also want to make sure that if your usage is way out of control, that we figure out why. Was an air conditioner left on for a whole weekend when you weren't in? Was this, those types of things. So I always try to monitor my utilities. Big ones I watch that really fluctuate: trash contracts, Republic Waste, Waste Management, Ohio Disposal. Those guys lock you in at a contract, and when your contract is up, sometimes those bills go through the roof. I've seen it where I've negotiated a $150 contract and it was $400 prior to that, so big savings there. The only other one I would say that's a big one that I tend to monitor is Spectrum, the utility company for internet and stuff. Because again, you get locked in for so long, and then once your contract's over, they start to increase your rates. And so it's just a good way to see it side by side to know when your increase happened. And then obviously if there's a way to decrease it back down. Telephone, obviously this is cell phones. I would say probably 90% of us, if not more than that, use our cell phones for business because that's the way it goes. It doesn't need to be something that's like, oh, they're going to dig through my call log and see how much was business use and personal use. But obviously be honest, you use your cell phone for business. However, your husband or kids don't, right? So when you do your cell phone bill or you split it up, like I'm on a family plan of like 8 phones and only 3 of them are actually business phones, right? So I take my phone bill and divide it by 8 and then multiply it by 3 to give me what it would cost for the 3 lines. And then if I upgrade or change something, that's a different cost in there as well. But definitely want to monitor the cell phone. Again, sometimes you have your phone linked in with your other utilities because it's through a Time Warner cable or things like that for the business phones. Then obviously that's not something that's super important to be split out. You don't have to like take every bill and divide it in half and those types of things. The telephone bucket is designed specifically for cell phones. Then we have our depreciable assets. And our depreciable assets are items that we could do under 179, which means you take it in full, or that you break up over time. Okay. Each piece of equipment has a different time frame. Each industry of the pieces of equipment have different time frames. So some things depreciate over 30 years, some depreciate over 5 years, and depending the item, the size of the item, and those types of things would determine on what that is. Depreciable assets, for the clients that I work with, there are very few that track them throughout the year. They just allow the accountant to track them in their software, and then we get a journal entry to put in at the end of the year. If you do track it and you do it more frequently and you know what it is by month to put it in monthly, great, awesome. That's good business practice. And then again, some of your bigger purchases might fall under depreciable assets. You just won't know that until you talk to your professional or accountant about it. Okay. So let's look up and see if we have some questions from this sheet before we go to the next one. Yes, Yolanda, the registration fee you can claim under license and permits, because don't you have to, I believe you have to do it pending the city every year, and you have to do it for every property. You also, Yolanda, pending how many properties you have, if you wanted to just create that rental registration fee, you could do that too. Can you post standard journal entries, depreciable assets with one click? No. The journal entries are more than one click. We can create, which we'll talk about in one of the last classes, a reoccurring transaction that would allow you to auto add it, and you wouldn't have to do it every month. But yeah, it's not just one click, sadly. Okay, so I think those are all the questions about this page at this point. Okay, so then we'll go to our last little bit. So then we have payments for contractors. So contractors are people that you're going to issue a 1099 to at the end of the year, meaning these people are not employees for you, but they also do some work for you. So this ties into the example I kind of used earlier, which is that your contractors, if you need to have a professional come help you because you're not a plumber, you might be a contractor, but you're not a plumber. So you might contract a plumber to come in and do the work for you. And you would issue them a 1099 if you paid them over $600 in a calendar year. So that would be what we would use a contractor for. Contractors could be bloggers. It could be people that are writing information for you, like content creators, I guess is really more or less what it's called. Technically, some accountants might be contractors pending the type of entity they are. Contractors can be anybody you pay $600 to or more that is in business for themselves, meaning they're not a small corporation, they're not a corporation, they are just an LLC or a sole proprietor, okay? This is a really important area to pay attention to, because if you tell a contractor when to work, they have to request time off, and how to work, then they're not contractors. They're more like employees. Contractors work when they want, however they want. They just have to, they can be told a deadline. I need this by Friday. And you assigned it 2 weeks ago, and they have to do it for you whenever. But you have no control over a contractor. So contractors can be unreliable. A lot of areas that I see contractors that are technically more like employees would be landscaping can be one, but my construction guys, where they're telling them what job to report to, they've got all this stuff they need to know when they're not going to show up for work. Those are more employees than contractors, and so you want to make sure that you keep that really straight and narrow. Contractors can be people that don't work in the US. So if you use Fiverr or you're doing a virtual assistant, you know, those types of things obviously can be contractors. Again, anybody that's in the US that makes more than $600 in a calendar year is supposed to be given a 1099. Okay. Home office. Some of you may or may not qualify for home office deduction. Home office means that you work out of your home. One room in your home is specified based on square footage to do work in. If you work out of your home, you can write off a percentage of the square footage. So if it's a 10 by 10 room, that's 100 square feet. If I have 1,000 square foot house, 100 square feet, it's 10%. So I can write off 10% of my utilities, 10% of my property tax, 10% of my insurance, 10% of my mortgage interest. Okay. So you get to have an additional deduction. Home office is not tracked specifically in QuickBooks Online, again, because it's only the percentage you get to take, but you do need to track it so that at the end of the year, if it does get deducted, it can be added so that your QuickBooks file and your P&L matches what your tax return says. Okay. 401k. You know, obviously retirement options. Some people actually contribute in for businesses, some they don't. If you contribute to the plan, then you can deduct a certain percentage or a dollar amount. If you are only doing it as the owner and it's your company and you're doing it, then you obviously have, again, structures on what you can deduct. Roth IRA is 5,500. The simple IRA is 25% of your income. A standard IRA has no limits. 401k plans are great. It's a way to, put money away pre-tax. So keep that in mind as well. And again, you would need to show that as a line item. If your employees are on your 401k plan, it might be pretty suited to have the 401k underneath the payroll expenses in a sub account. Okay. Client gifts, they're deductible up to $25. This is really more real estate. My realtors obviously buy closing gifts for their people every time somebody buys a house from them, and those might be flowers, gift cards, get it started, home self kits, those types of things. But you can only deduct up to $25 per. And then continuing education, this goes under the education expense, the same type of thing. Obviously, we do continuing education to stay on top of the items that we need based on our professions. And so you definitely want to make sure that if you're a stylist, you're keeping up with keeping up with the things. As an accountant, I have to keep up with all the trends. There's even continuing education for QuickBooks sometimes for me, so that I have to pay attention to those. And then also making sure that we keep the seminar materials, the courses, those types of things. There's tons of courses out there. Can't Score is constantly running. This could be considered continuing education or educational expense, obviously, for you guys as well, if it was something that you guys had paid for to do the class. Okay. So these are the main options that the IRS gives us for categorizations. Does this mean this is all of them? No. There are plenty of other things that probably do qualify that you could do at any point. But this gives you an idea of some of the basic main ones. And then obviously you can build your sub accounts and our P&Ls off of this. So this information for the last 3 slides is going to be what we go back to every class from here on out as we're categorizing all these expenses and working through all of these things to make sure we're putting all of them in the right bucket. Okay. So let's look at our questions. I see we got some questions in. Does this program print the 1099s on 1099 forms? No. Usually QuickBooks Online requires you to order the forms. So they come in paper form, and then you actually put them into the printer and it prints. I think they're working to match desktop with the ability to say that you're printing on pre-printed paper or non-printed paper to be able to do it. You do have the wizard in here though to generate the 1099 forms. It's just a matter of if you have the paper or not. Okay. So Stephanie asks, how do you claim contractor payments to individuals overseas? A virtual assistant overseas the hired through Upwork. So Upwork would still be a contractor expense. You just don't have to do a 1099 because they're not here in the US. So you could still do it. If you want to show the difference between contractors you need to issue 1099s to and contractors you don't, you could do like Upwork as a sub account of contractors for you if you needed to do that. That's more detail for you. Stephanie, depends on the type of entity you are, whether you can do home office and regular office. Usually if you have a brick and mortar, which we call as a regular office, you don't get to use home office too, even though you might use both. However, since COVID has happened and more people are working 3 days from home and 2 days from an office or vice versa, there are some ways to work around that, but it would just depend on the type of tax return and then obviously what your circumstances are. If you want to reach out privately, since that's more of an individual thing, we can totally talk about that. I don't go into more detail on how to break down the home office expense in a future class. We do talk about what happens if we pay those expenses and which expenses can we write off through the business that the business should be paying for. So for example, things that for home office qualify is like internet. Like obviously if you're using QuickBooks Online, your entire business runs off internet. So you might be able to take the internet bill in full versus only the percentage if you're working from home all the time. Alicia, if you have a more specific question about the home office breakdown, we could talk about it. It's hard to go in more detail because obviously everybody's home office size and everything is different. But it's just based on the percentage of the home that you claim as an office. If you house inventory or you were like to be a reseller of things like that, you might have more square footage than some people that might just have one room in their house that they have a computer and a desk at that they work out of. I will actually give you my contact information at the very end. It's the last slide of the PowerPoint. So you guys will have my contact information, no problem whatsoever. Can you be more specific about what your question is with bonuses? Ellen? They can be.
That would just fall into the employee pay here account, right?
Yep, correct. Under the wages, under the first page here. Employee wages, you have wages, salary, bonuses, commission, sick, and vacation pay. They do have to be claimed. So if for some reason you gave somebody a cash bonus of $500 and they weren't going to claim it, then obviously that's different. The bonuses that run through payroll and they actually are claimed are the ones that can be written off. Okay. Any other questions about our IRS regulated accounts? Okay, perfect. So let me switch here. So as you can see, QuickBooks kicked us out because we were, been too long without being on our QuickBooks Online. So as a security thing, it kicks us out. So we are going to go ahead and sign in, but I need to sign in using a different user ID because none of those were the right one.
I don't think bonuses can be written off.
What'd you say?
Ellen asked if bonuses can be written off, and I don't think they can be.
It says based on if it's run through payroll, they can be, but it has to be claimed.
Huh. It surprises me.
So obviously we're logging in. So here's our wizard again. And we're going to tell it to skip it for now. And I guess there is a different, if you're an owner taking a bonus, there might be a cap on what could be written off.
That surprises me.
Because pending the type of entity, your retained earnings has to stay positive. So there's some nitty gritty in there. But cash bonuses, you're right, cannot be written off because obviously they're not claiming them, so you can't claim it. Right. Same goes for contractors. If you don't issue the 1099, technically good practice is that you're not supposed to be able to take the deduction either. So it's really important to stay straight and narrow, keep all our ducks in a row, and that we follow all the things we're supposed to be following. Is it done perfectly in the world? No, I've seen some crazy, but for good practices in this course, we're going to teach what we should be doing.
Yeah. And you just have to be consistent at it. You can't change where you want to put dollars in your accounts. Once you decide that's where they need to happen.
Yeah, you want the consistency, not only for your own sanity, but also for, if you were to get audited by the IRS, everything just needs to stay the same over and over again. Okay. So we're going to talk about manually entering some transactions now. So we obviously talked about syncing the bank account. We talked about manually importing the data. Now, if for some reason none of those work, because I know some of you said that your bank accounts don't sync, what would we have to do? Okay, so QuickBooks Online is not my favorite when it comes to doing the manual transactions, because I'm the type of person that likes to hit my tab key and never really take my hands off my keyboard. And I don't really get to do that when it comes to, QuickBooks Online. They've come a long way in this, so it's all good, but there are things that obviously still take time. So if we're manually entering transactions, we have to go into our chart of accounts. So our little gear icon here, chart of accounts. Then we have to select whichever account we might be working out of. So we're going to say Chase, and I'm going to click View Register. And again, here's some wizard stuff that we'll click out of. So I don't have anything in this register yet, because obviously my bank account wouldn't import and it doesn't sync. So underneath where it says add check, there's this little gray bar. So if you click on this gray bar, it opens the box to actually enter information. Okay. So underneath here, we would select a date. So I'm just going to go back to June 1st, but I'm not entering a check. I'm actually entering an expense. So I want to change the category to expense. Okay. In that process, it might change what this looks like. Okay, so I'm going to change it again. We're going to change it from here. We're going to change it to a deposit. Okay, so now it gives me the ability to type in the deposit amount. Now, if I go back to an expense, I don't have the ability to use this box. Okay, so they're trying to keep it so that we know what's going on, kind of where, and obviously keep you in the right buckets. If you had it as a check, it's going to try to type in a check number. Okay. If it's a check, not an expense, not the end of the world, obviously, but we don't want a check number if we're not using checks. Okay, so that's why we obviously want to make sure we select expense. Okay, so this you will always have to change no matter what you're doing. Okay, and then because we've been talking about it, I'm going to put Chipotle in here. Now I haven't added Chipotle, so I got to add it. And then on the memo, I could say lunch for staff, so that I know that it's more than 50% deductible because I bought my staff lunch. And say it was $55. We're just going to do an even number, obviously. And then we're going to see if we have a meals account. So it does look like we have a meals, and we have a meals with clients, which would be more deductible. And we have a travel meals, which would be more deductible. So I'm just going to select meals. Okay. Now these accounts already were in here from QuickBooks. I didn't enter those yet, right? So QuickBooks, again, like I said, has some of the basic accounts that you'll be able to use. It'll take time for you to get used to searching. Now, I am a typer, so I type, right? But if you decided not to type, you could just get this drop down and you would just have to search through the whole list to find what you're looking for. Okay. Then I would go over here and I can click save. And now you'll see that it shows in my register. Okay. Again, to add another transaction, you have to click again, change the date. So we'll do 6/2 now. There is no reference number for me at this point. We'll do payee, we'll do Microsoft 360. Okay. Again, not somebody that I've paid yet in this file, right? And I'll put email subscription, right? And our payment for this would be $13. It's not very much. And then again, I would drop down here and let's see if I can find. So here's office supplies. So it doesn't look like I have a dues and subscriptions or let's see if we have a soft. So here's a software and apps that would work for me because obviously Microsoft 360 is a software. And then I can click save. Okay. Now, if I need to put a deposit in, I don't necessarily have to put a payee in for a deposit. If you're creating invoices, which we're not talking about today, the payee will already be there. If you are, cashing a check, for a job that you've already done, it might be in there. If you're just doing like you put money into the business, obviously the payee might be you. So sometimes you don't have to put a payee, but obviously the more detail, the better. And then I always write myself a note, like if I did put money in, like for example, I put $100 in, so I'll put my name in here. And I decided to help a client with a sponsorship. Okay. Oop, if I could spell. And so I put $100 in my personal cash in to help a client with a sponsorship. So this isn't going to be a sales. It's technically going to be an advertising expense. And then you could say if you want it to be sub, because I sponsored something with them. So I put the money in personally to do that. So I'm going to credit it. Okay. Because I then will write the expense for the marketing, like write the check to the company for the marketing expense, but it offsets the money I put in. Okay. So you can do it both ways. Again, if you don't use invoicing, but you are going to do manual entry and you're going to just need to deposit, you could put the customer's name. You could put a payee's name. You could not put it in and just call it sales, you know, income, sales of products, any of that type of thing. That is more of a preference on you. If you're using a POS system, so a point of sale, and obviously you're just putting that data in on a monthly basis, you know, based on the sales, then I would say just put them in as sales and then compare all the deposits with your payout report from your point of sale company so that you can make sure that you captured all the income. There is some discrepancies in some of the manual entry versus some of the real-time entry. And the reason for that is that you will manually enter probably the things that clear on the bank statement. And then obviously you're going to have to manually enter if you're writing checks or paying things early, but those might not clear till the following month. So you just have to make sure when you're manually entering that you're not putting duplicate stuff in. QuickBooks is not very helpful when you manually enter something and you've done some syncing or marked stuff paid to get them to communicate like it does if the bank is integrated. Okay. So that's one of the areas that we can see a lot of duplicate transactions. So we definitely just want to be careful with that. Okay. Jennifer, would it be helpful to have meals for staff as a sub account? Absolutely. You can create as many subs accounts as you'd like to be as detailed as you want. I just usually make sure that I ask the question at the end of the year with my clients to make sure we supply their CPAs with the proper information so they know the difference. But if you're doing a lot more magnitude of them, absolutely create a sub account so it's easy for you to see. Any questions about manually entering a transaction? Veronica, yeah, the goal with QuickBooks Online is that everything is integrated. So to manually enter this information, it's not only sadly archaic, but very time consuming. You're correct, especially if you have multiple pages of bank statements. I would try, if you can't get it to link, to at least try to download the information and import it. That was the workaround for the longest time, specifically with Huntington Bank, if you had a token, because as you notice, when we do the login information to sync the bank, it only gives you the option for a username and password. And with Huntington, if you have a token, you have a customer ID, a username, and a password, and then another layer of security. So, but we are able to download that information and import it. Can you tell me which bank that you work with, Veronica, so I can give you a little bit better feedback with that? Paula, you're correct. It's like writing in your checkbook the old-fashioned way. It is a lot. I would hope at some point that QuickBooks Online makes this a little bit better, but they built this entire platform around the premise of integration. And so if you're integrated, obviously you wouldn't need to do these steps here. So Alicia, if you imported a vendor list, the vendor could be set up before entering. If it doesn't, the payee is the vendor. So the payee can be a vendor or can be a customer. So let me show you, let me put an expense in and we'll do GoDaddy because I didn't put GoDaddy in here yet. Okay. So see here where it says vendor or customer or employee. You select. Majority of the things that we're paying out payment wise are just considered vendors. But if you then are doing deposits, like I could have been considered a customer. And you can also see, like if you click on one to make an edit, see how it says customer. So you can see what type of entity it was set up as pending what's going on. Yes. So Nicole, there's a couple ways to do the sub account. So under this screen, we're going to just do sales. Let's do, you want it to be Medicare sales. Okay. So if I add Medicare sales, see where it says sub account? And we would just look for sales. And then it would be a sub account underneath there. So that comes up on this box here. If you're in the chart of accounts and you click add new, you get this same window and you can put you could click that sub account button. Now, if for some reason you didn't you created this account and forgot to make it a sub account, under chart of accounts, we can edit it. And then obviously once you click edit, this box comes up and you can again select sub account. It says for sub accounts, you must select the same account type for the parent. Income. That would be why. So Veronica, Chase definitely should sync just fine. Huntington, do you have the security token? And Key Bank. Let me look. Oh, banking service. I know KeyBank has the token, but if you're using one of these two, it should sync. KeyBank does have a security feature on the other side. Veronica, if you want to reach out with me at the end of the class, I probably can help you get your stuff integrated. Paula, yes, we will talk about later the sub accounts and the classes so that you understand the difference. Paula, what do you mean you had some trouble with bank statements coming to QuickBooks? Karen, it doesn't matter whether you do it as an electronic fund / check or an expense. It's the same thing. It's just a matter of if you want to be able to put that reference number in from the electronic transfer. Like you could write ACH, you know, in the reference line, or the check number if it's, you know, used a bill pay and it gets, you know, whatever check number assigned once they're issued. But either way, it's still considered an expense. It really matters if like you're going to go write a bunch of checks and you want to start at check number 5,000 and then, you know, it'll keep rolling the checks in order 5,001, 5,002, 5,003. Paula, I don't know if the bank statements specifically go into QuickBooks Online. Even if the integration is there, it's not something that I've seen used on a regular basis. But if you want to have whomever's working on the books moving forward, I can definitely take a look. The transactions should always come over, but the statement itself, I'm old fashioned. I print and go through line by line and compare it. Okay, so I think I answered all of those questions so far, guys. So let's get out of this screen. So now we're going to jump back in and we're going to talk about creating rules. Okay, so rules are great if they're set up properly to begin with, and they can be the enemy if they're set up improperly. Okay. So one of the areas that I tell people to pay attention to rules is you want to make sure we set rules on things that never change. What would be one of those things? So things that never change, in my opinion, are utility companies, suppliers, more than likely, unless you're doing job costing, that might change them a little bit. Okay. Your office supplies people might not change. Your dues and subscriptions are probably not going to change. Things that change, gas stations. You might go and get gas one day and the next day maybe you needed a coffee or a snack. So that's going to change. So you don't want to set up rules for those. Rules can be set up with a couple different things going on. So how do we set up a rule? Well, there's 3 or 4 ways to set up rules inside of QuickBooks. We're going to cover, a couple of them today, and then obviously we'll cover a couple more later. So I like to take my synced information and I like to switch it by description so that I can see what is actually coming out, and then I can, be more advocate about making sure that I have them in the right spot. So we had categorized bill and pay to bill and pay, and then it was a merchant fee, right? So if I hit confirm, because that's the right thing, and I'm going to confirm another one, it's going to pop up and ask me if I want to do a rule. Okay. And so it says, do you want to use the same category for bill and pay always? And I said, yes. And then it prompts down and it says, you want to confirm who paid? Sure. And then do you want to do it? Now, the big thing that you need to look at is in the middle of the screen here. It says, do you automatically confirm transactions to this applies to? Okay. I'm not an automatic confirm person. The reason I say that is that you never see the transactions once you tell it to automatically confirm. So I'm going to do it so you guys can see what I'm talking about. So you can see that there are 3 transactions that were listed below that are supposed to go in bill and pay. So if I create this rule and I scroll back down, or I scroll back up, there is no bill and pay in my list. They are gone. Okay. They are now in the categorized field. Now, anytime bill and pay comes up in my thing moving forward, I'm never going to see it. It's just going to auto confirm. See how it says rule auto confirm? Nothing I can do about it. Okay. So I don't like that because I like to see, for example, I like to see what's coming out of my bank account on a regular basis. But I also like to see that, as you can see here, my bill is normally $48 to $55. What happened that it was $85? Now, if I never see this transaction and I'm not really paying a whole lot of attention when I'm doing some of this stuff, I would never look back at this and go, well, why was that up $30? Because that tells me that somebody canceled a payment that normally billed and I got charged probably a $25 fee that I need to get in touch with my client to get handled. So these are the types of things that if you auto confirm it, you might not see this information. Okay. So I don't like the auto confirm. I do like the rules. The rules help make my life a lot easier. So let me find another one that we've got a decent chunk of stuff with. Because again, I'm a creature of habit. I use the same few or 4 things here. Let's see. So Legal Shield. Okay. So professional fees. So yes, I want to use it the same, but if I check this box now, it won't auto confirm. And then this one I can change.
Hey, Ann.
Yeah.
Hey, I've got to jump off. I've got an appointment in a little bit, but Gwen will be on and she'll be kind of keeping an eye on the chats and the questions for you. So
Awesome.
okay.
Perfect.
All right. Everybody have a good weekend. So long.
Okay. So then I don't want it to auto confirm, but it is called Legal Shield. So I'll hit create. So now, as you can see here, if I click on this, it shows me that a rule has applied, that it suggests that it's legal and accounting. Okay. Rule applied. You also sometimes, pending the view, again, as you can see here, it has a little thing. That's how you know the rules applied without doing it. So you could hit confirm here and confirm here, and it's going to categorize those with the rule. Okay. Now up here as well, we have the let's see here. Is it this one? There's a way to edit the rules. They moved some of my stuff around, so give me a second. Let's see here. Nope. Let's see, where did they put it?
Under get things done.
Yeah, it might be under here. I'm working, this is the newest of the newest platform, so some of these images do look a little bit different. Nope.
Can you search?
Let's see here. I have my cheat sheet over here. Let me look really quick. Yeah, it says it should be under here. Am I crazy? Create rule. No, it is definitely not. Let me see if I can switch my view and let it. Oh, I don't know. They have hid it from me. Because they are not, it's not showing create rule on any of it. And these are our two. Huh. Let me see if I've got my third way on here. I'm going to switch back to my business view because the accountant view didn't help us. So it says it's under bookkeeping. Which I don't have that option.
Called something else.
Yeah, live bookkeeping. There it is. Okay, so under the new module, under live bookkeeping, it has the rules. There we go. So you can go to your rules here, and then the two rules that we've created are here, and you can see whether it auto adds or not. And then obviously you can edit this. So if you've auto added one by accident, you can turn that feature off. So where it says auto confirm right here, you can turn it off. Okay. Or if you've decided you want to auto add, you can turn it on. Okay. And obviously in here, you can create a new rule too. So you can name it. I tend not to create rules manually in here personally, because if you add two of the same named items, it's going to try to auto confirm, auto create an ad for you or auto create a rule for you in the transaction list anyways. So it doesn't really make a huge difference. But knowing that if you, especially because earlier we had somebody that was like, well, if it auto adds, will I ever see it? Well, no. And so if you wanted to edit it, this is where you can see all your rules and you can edit it. Okay. You can also export all your rules or import all your rules. So QuickBooks Desktop, if you move from desktop to online, has had rules the whole time. So you might be able to import your rules if that was something you needed so that it stayed consistent. Okay. Sometimes if we create rules and then, circumstances change or we decide to recategorize things again, that would be where you need to edit things. You definitely want to just pay attention to some of the items that would be added. Again, it's always going to suggest we add a rule once we've added two of the same transactions, even if it's over months and months and months of time. Okay. So then if we go back down obviously I'll find something else we could do to make sure we do the rules just one more time. So here's one. So I want to name it Washworks. And then here you can click create a rule and you can name it. Again, at the very bottom, you have the auto confirm or not. This time when you click create the rule from inside of the item, it doesn't automatically auto confirm like it does when it's trying to auto populate the rule for you. Okay. So I hit save. Now all my washworks all have a rule applied and I can confirm them. So again, this one is just by creating the rule. So Verizon would be another one I could create the rule down here as well because my Verizon is the same. You wouldn't need to create a rule. It's just a feature that QuickBooks tries to prompt you into in the wizard. And no matter how long you've been on QuickBooks Online, it will always, if you enter 2 of the same name transactions, will ask you if you want to create a rule. Do you need to? Absolutely not. When you go to do, like for example, I'll click on Verizon Wireless. So Verizon, and I'm going to name this telephone expense because we said it needed to be telephone, or let's see, cell phone for me technically. And I'll confirm that because it'll go in the right account. Now it will automatically then, if I click on another one, it's changed this Verizon to telephone. And if I hit confirm, it just automatically will populate. And you could just X out of this and it goes away and you don't have to do any of the rules whatsoever. That's totally okay. Nicole, we'll talk about the editing of categories here in just a few minutes, okay? Okay, I think those are all of our questions on the rules. Okay, so 3 ways to create the rules. Under bookkeeping rules, you can manage them and create new ones. Just adding transactions 3 times or twice, it'll create a rule. And then obviously inside of clicking a transaction, you can click create a rule. Okay, again, QuickBooks Online, as we go through more and more of this, has 3 ways to do things for a lot of these areas. And no, there's no right or wrong process in that. Okay. All right, and then our last stuff we're going to talk about today is finishing talking about our chart of accounts, okay? So inside of our chart of accounts, we've had a lot of questions about how to edit accounts and sub accounts and stuff like that. So if you go into, let's see here, vehicles is a good one, okay? That's a fixed asset. Let me find the fuel down here. So auto here. So if I hit edit on this, it comes up here. I can change the name. I can make it a sub account. Okay. This is how you would edit it. If you need to create a new account inside of the chart of accounts, you would do new. Make sure you select the type of account it might be. And always defaults to advertising and promotion. I don't know why. But I might rename this Facebook. Oof, I can't spell. And then make it a sub account of advertising and marketing. So then now if I pull advertising. Let's see here. I'm going to sort it by account type. Let's see here. Oh, let me filter it so it's A, not. So here you go, advertising, and then all the sub accounts. Nicole, does that answer your question on editing the categories? Okay, perfect. So guys, that is everything we had mapped out for today's class. For our next class, we are going to talk about, here I got my little outline. So our next class, we're going to talk about reconciling the bank accounts. We're going to get into the bills, paying them, printing checks. Again, for some of you, if you're in the basic software, you might not be able to see that, but let's, go over it in the class so that you can decide if it's something that you need. There are some workarounds if you're in the basic module of the QuickBooks Online to still be able to cut checks without entering bills and everything like that. We're going to talk about invoicing, the item list, which is really important. Obviously, when we create invoices, making sure that we're mapping those to the proper income accounts is going to be a big deal. We're going to talk about matching transactions. This plays into, when you mark an invoice paid, but then you go to the bank and you make a deposit, how do we match that information so we don't have duplicate income? And then obviously our vendor and customer management. Again, we kind of tapped on how you can see the difference, but obviously there's areas that we can manage our vendors and customers more specifically, keep their detail updated, email addresses and all that kind of stuff. So that's going to be what's in the next class. Again, so I encourage you guys to come back. I'm going to teach the class the same way we did today. We'll be in QuickBooks going through it in our account, which we're building all this data from square one. Along with you guys, we'll get the PowerPoints so that you can see all of that information. And then any questions you have, we can ask at the end of each module. The next class, I believe we have for 3 hours. I think we have 4 allotted in case we're another big class size. So if we run over a little bit, we have that time. But this will be a lot more hands-on, and some of the stuff we cover today obviously plays in to the things that we're going to cover in the next course as well. And then the last piece of information I want to give you, and I know it was dropped in the chat earlier on, is just my contact information. So you guys can reach out to me directly. Obviously, feel free to reach out to these guys at Can't Score. They're happy to connect us as well. They're phenomenal individuals. They're very educated on what they do. And I honestly, Can't Score I've known for a really long time. So don't hesitate. Obviously, it just depends on the day if you get me on the phone or if I get back to you within 24 to 48 hours. But obviously, I'd like to help anybody that I can.
And there's a question in the Q&A regarding what Quicken do we need to have? And this is not sure from whom that is.
Nope, that's okay. Are you referring to being able to move from Quicken to QuickBooks? Because Quicken is a different software than QuickBooks Online. I've not moved Quicken to QuickBooks. I'm sure it can be done from an export into an Excel file. I don't know what version of Quicken you would need to have. Gwen, I think you said the recording would come out as soon as it was ready for these guys. We would get it emailed out. So I would say within the next few hours / day or so at the latest.
Right. It may be for the end of today or early tomorrow.
Yep, perfect. And then I'm just checking the chat to make sure that there are no more.
Yeah, I'm looking also to see.
And guys, if I missed any of your questions, feel free, totally reach out, or if you want to drop it in the chat again, because obviously with 70 of you or so, there was a lot of chat going on, and we want to make sure everybody gets their questions answered. Karen, thank you for that insight. So Karen must have moved at one point from Quicken to QuickBooks, and she said it had to be imported to QuickBooks Desktop and then moved to online because it didn't import to online. And guys, I appreciate all the positive feedback on the great seminar and the good teaching and everything like that. We appreciate that. Make sure you fill out the questionnaire these guys send out too at the end, because it allows them to continue to do seminars like this with people like me to be able to make sure you guys are getting all the resources you need in their network. Gwen, Denise says that she's unable to attend the third class, but would like to get a copy of the transcript. Can we reach out to her directly and see if there was something we can't do for that for her?
Right, Denise, because generally these are provided to attendees, but I will make a note to send you, or yeah, I'll make a note to send you a copy of the transcript.
Yes.
Okay.
Stephanie, the manual bank adding transactions is on there. So you can see the import, and you can also see just step by step on how to enter it manually. And guys, the class next week is the same time, 8 to noon. And it's on Thursday. We try to make sure we keep it the same days to keep, make it easier for everybody's planning of their schedules.
And we'll be doing the same thing that we had done previously. We'll drop a copy of the slides into the chat
Yep, absolutely.
so that you have the opportunity, if you wish, to print those out and follow them along with Ann. Okay, Kim, I see your message too. The answer is yes. We'll make sure you receive that. And that's for the next class. Okay.
Mhm. Okay, thank you, Anne, for your leadership this morning.
No problem whatsoever, guys. I'm happy to do it. I'm excited that we've got a lot of participation in the class this round.
Okay. And see you all next week.
Sounds good, guys. I'll talk to you soon.
Goodbye.
Bye.
Okay, that's a SCORE workshop. We started at 8 o'clock.